Okay, good afternoon to you all. Good afternoon.
Good afternoon, sir.
Yeah,
Yeah.
okay.
Good afternoon.
Right. So today I thought I will go through the third set of slides, and after that I will discuss the second set with regard to the corporate governance of the banking sector, right? So for the, I thought, okay, first I will discuss about the corporate customers and their application. Now, can you all see the slides? Can you see the slide?
Yes, yes.
Okay,
Yes, sir.
right. Now, what is KYC? Yes, can a volunteer? Can you tell me what is KYC? How important is this KYC? As bankers, we are more focused on KYC. Whatever said and done, we say, okay, whether the KYC is completed, whether we have obtained KYC. So it's a common term when you come to banking. So what is KYC? Yes, a volunteer. Chamil, what is KYC? Chamil, what is KYC?
It's actually, we can say the KYC simply, it's a know your customer, but it's a broad term. Know
Okay.
your behavior of your customer is KYC.
Know your behavior of your customer. Good explanation. Now, actually, these concepts were not there earlier when the banking started, or actually with regard to this compliance related money laundering, along with the money laundering rules, the KYC concept was introduced. Earlier, there was no KYC requirements, but the bankers, they knew your customer, right? So simply what it says is you know your customer. So if you don't know, don't maintain a relationship with him or her. It's very simple, right? In order to maintain a relationship, you should know them. Now, you can't maintain a relationship with an unknown friend. No. Similarly, friend, you should know in and out of that particular customer, you should know. Friend, you should know. Then only you will develop, start a relationship. So this is common sense. There's nothing more than that. It's all about common sense application. Simply what it says, if you don't know a person, don't deal with him. For you to know him, yes, definitely you have to maintain a relationship. But the point is where now today this KYC form has become a box ticking exercise. When a customer comes, now can someone just explain what is your process? Now, if tomorrow, if I'm going to come to your bank to open an account, can Dennis tell me what is your approach, or how I going to, what type of information you wanted from me, why you want those information? Yes, Dennis?
Yeah, basically, we are finding the basic concept is to find the money laundering activity throughout this KYC. We have to
Okay.
find out whether this person is compliance with the normal procedure. I mean, the whatever the procedure he is earning money as a normal procedure, other than the that buying terrorist activities, so whatever the unethical thing, we are basically focused, or we are basically screening the customer. He is earning, or he is deposit money is his purpose is basically his purpose is money laundering or not. That is what we are searching through the KYC.
Okay. Chaturanga, your camera is on. Chaturanga, your camera is on. Chaturanga. Okay, fine. Right. Now, what you say, what your answer is right from a compliance point of view or a money laundering point of view. Now, how many of you all have read this KYC form? 100% do you know what is in and out of that particular form as bankers or financial institution employees? Yes. Chaturanga, do you know what is there in the KYC form? Have you read that form? There are, it seems to be there are newcomers. I will request them to do a brief introduction about themselves later. Yes, can someone tell me, have you gone through that particular form? Have you read that form?
Uh,
Yes, Dennis?
yes, yes.
You know in and out of that particular form?
No, no, not much of that, but
Yeah, that is the
I
problem.
I read anyway. I have gone through the application, the KYC application. When
Yeah,
I open the report, anyway, I have to tick all the questions. No.
yeah. So, are you working for a bank?
Yes.
Okay, which bank? And what is your area of study?
National Savings Bank.
Right, what is your area?
I'm the regional manager. I'm the
Right.
anyway relating
Okay.
to the operations.
Right. Now, all basic information you get from this KYC. KYC, I think, unfortunately, though we try to get that form as a operational requirement or to meet the compliance or money laundering requirement, for me, it's a marketing instrument. If you know me, if you know details of me in and out, it will be easy for you to market your products. Right, it gets all basic information. What is my name, what is my address, workplace, right? So all sort of important information which are required, which you should know are there. But unfortunately, if you see, if you go back and if you check your KYC forms, those are outdated. Now, for an example, if a customer has opened an account in 2000, and if you are using the same KYC form, I'm 100% sure that it's outdated, because sometimes for the last 21 years he might have changed his phone number, he might have changed his residence address, his job, his status, right? So much of information have changed, but you are depending on old information and you are dealing with a customer. Sometimes his income, maybe he just started a job at that time. Now he may be a manager or a accountant or a professional, but those data are not updated. So KYC is continuous updated, but unfortunately the financial sector employees, they take this KYC as to avoid an audit commit. When the auditors come, when they don't see this KYC, they will say KYC is incomplete. Just to avoid that, they take this KYC, but they don't know about their customers. Simply, it's a box ticking exercise. It's a form, outdated form, which current latest information are not there. Now, if you take your last 10 years, all of you all, have you all changed your phone number? Last 10 years, have you changed your phone numbers? Yes, Dennis, have you changed your phone number for the last 10 years?
No, no, I'm using the same number. No,
Same number. Okay.
I'm using the
How
same
many?
number. Yes.
Yeah. What about Sean? Have you changed your phone number? I can't hear you. You're muted. You're muted. I can see you, but I can't hear you. Chaturanga, have you changed your phone number for the last 10 years? Alison, what about you?
No, sir.
No, same phone number. Right. So
Yeah.
yeah, the normal practice is where people, their tendency is to change their phone number. So if you have not changed your last 10 years, fine. But majority of the customers, they change. I don't know why they change, but they change. Right. And as a result, sometimes you can't contact them, or they have changed their email address. Sometimes their address is now they are residing in a separate address. So finally, you can't do anything with those KYC. So simply, majority of our information, KYC information, are outdated, and you don't know about your customer. So especially what I have seen is when the FIU team comes, they will say your KYC is outdated. So I know practically there are a lot of difficulties of updating this KYC. Sometimes when you inform the customer to update the KYC. They don't give this information. It's a real battle. I can understand that. But the point is where KYC is just to know your customer and to build relationship based on your knowledge, right? And if you know me well, my background, it will be easy for you to canvas your product. But unfortunately, this form has become an audit concern. Just to avoid an audit confirms, bankers, financial institutions, they take this KYC, but still they don't know. Earlier, before this rule was introduced, there was no form, but we knew our customers. That is the relationship that we built. But today, with this automation, the relationships have gone down and we don't know who are our customers. So that is one reason, that is one of the reasons where you get high NPL ratio. When you are going to lend for people whom you don't know, whereas your performance are based on your targets, sometimes you keep on lending for the people who are not suitable for your bank, not capable enough for the financial institution. Finally, you ended up with a NPL or non-performing customer. So what I always emphasize is that KYC is not a FIU tool. It's not a operational tool. It's a marketing tool. Then only you can build up a lot of relationship and where you can cross-sell your product. So please make sure that if you're taking a form, and top of that, as I told you, majority of the bankers, they don't know what is there in that KYC form. Right? If you see, there are 2 pages, 3 pages. Foreign banks, they have 4, 5 pages, right? They ask all the information. But finally, customers, they are not much more concerned about that. They try to say yes or no or not applicable. Not applicable is a common statement that we see. Though those are applicable. And finally, you have an incomplete document which cannot be used at all. Right. Now, types of customers. Any questions with regard to that? Any questions? Right. Types of customers. Well, what are the types of customers that you deal as a banker? Who are the parties? Who are the customers that you all know? Yes? Can someone tell me the types of customers that you deal? Thangaraja, can you tell me who are the types of customers that you deal? Yes? Who are the types of customers? Thangaraja? Thangaraja is silent. Sandhya, who are the types of customers? Yes? Kaushalya, who are the types of customers that you deal? Kaushalya? Kaushalya, are you in the session? Shan, I think your camera is on and Shan, yeah,
Yes, yes,
yeah.
yes, sir.
Who are the types of customers, Shan?
Retail customers and corporate customers.
Okay, can you just little bit elaborate who are these retail customers and who are these corporate customers? Who are these retail
Retail customers,
customers? Yeah.
are the who have retail facilities like housing loan, personal loans, leasing, and
Okay.
corporate clients who have a turnover more than 1 billion with
Okay.
a package of facilities like import line, overdraft.
Okay. Right. You have gone to the second stage and you are explaining about the type of the customer. What I want is to individual sole proprietorship. Similarly, what are the types of customers? What are the business entities that you know where you
Sole
deal?
proprietorship,
Yeah.
partnership,
Okay.
and limited liability
Okay. Simply you
companies and
have
PSCs.
okay. Simply you have 4 categories. That is the individuals, sole proprietorships, partnerships, and companies. Now, clubs and societies. Can you lend for a club or a society? Can you lend? Do you all lend for a clubman society? Yes. Bankers, do you all lend? Dennis, do you all lend for clubs and societies? Yes.
No. No.
Why? What is the reason why you don't lend?
The thing is very difficult to find out the KYC of these clubs and the societies. I mean, it's very volatile. I mean,
Okay.
uh,
Yeah. So annually office bearers might change, or continuously there can be changes. So the point is where if the office bearer is appointed for a particular period on the next tenor, they might come and say, look here, we are not responsible. The earlier team has borrowed, so we are not going to pay. That is the main reason. That is why the bank financial institutions are not lending for these clubs and societies, but you do take deposits. You can lend, there is no problem. But if you are lending, what is more important is to ensure that you lend for a short period, less than 12 months. So if the tenor starts from Jan to December, you can lend from February to November, no problem, you can do it against the office bearer's personal guarantee. So if the next tenor or the newcomers say, no, we are not going to pay because they have borrowed without against the constitution, then you won't be able to recover. So that if you have taken a personal guarantee from them, yes, you can recover from that. So, but bankers as a financial institution and in common, they don't lend for these clubs and societies, but they do take deposits because they have a lot of money. There are savings, you take it, but you don't lend. But that doesn't mean that you can't lend. You can lend, but you are subject to certain restrictions. So it should be short term and against those office bearers' personal guarantee. If something goes wrong, they are responsible for the facility. Right. So sole proprietorship, partners, individuals, sole proprietorship, partnerships, and companies. Now, tomorrow I'm an individual. If I come tomorrow to your bank to open an account, what are the documents that you are requesting from me? What are the types of documents you want from me? Yes. Sean, what are the documents that you want from me?
A valid NIC, national identity card.
What do you mean by valid?
driving
What do you mean by
valid
valid
driving
NIC?
license.
Valid.
Sorry,
What do you mean? What do you mean by valid NIC and
sorry,
valid?
sorry,
Yeah.
sorry. My mistake. It's a
Yeah.
NIC and a valid driving license and a valid passport, plus
Okay.
a address verification. If the address is same as in NIC, it's okay.
Okay.
But the customer should reside in the area. For
Okay.
that, we have to take an address verification.
Right. So you want either NIC or driving license or a valid passport. Any of those documents, or you want all three?
Any,
Any of those, right?
yes,
If the NIC address and the residing address is different, you want a verification of the address as well. But it
yes.
has to be within that particular area or region
Area,
according to your
yes, yes,
organization, right? That's a money laundering requirement.
yes.
Now, okay. Now you get a lot of NICs. Now, what do you get more, NIC or the driving license in practical sense? Passports, of course, very rarely we get. So it has to be a valid passports in the sense it's not expired. So if I'm going to say I don't have my NIC and if I don't have a driving license, then if I have a passport, it has to be a valid passport, not an outdated one. Now, in practice, what do you get more, NICs or more driving license? Yes. Don't talk about the people who are not working. People who are working, what do you get more, driving license or much preference is there for a driving license or a NIC?
NIC.
NIC, right. Now, If you take your NIC, can you read your name on the reverse of the NIC? Or can you recognize you? Your current NIC, you have a current NIC. Can you recognize you? And can you read what is on the reverse? Yes? No. Answer is no.
No.
Yeah. Alison, what about you?
Because photograph has taken 10, 20 years before.
I actually got the new one, sir.
Okay. Then you are an exception case. Okay. Shan, what about you? Can you recognize you
Quite different.
as Shan?
No, no,
Different. Okay.
no.
Okay.
Yes,
Then
different.
why are you taking this NIC and trying to identify a person? Majority of the people in this country, they have this O-level issued NIC, right? Or A-level, because that's a requirement for those two examinations. Plus, on the reverse, you can't read. So then why are we taking that NIC? For what? What are we gonna, are we magicians to read that, what is there in that particular NIC? That's a common issue what I see. Bankers, financial institutions, they take a copy of the NIC, but you can't, there is nothing for you to read. Sometimes photograph is there, NIC number is there, but you can't identify that person. So then what is this KYC? Right? And top of that, driving license is not a valid identification document in Sri Lanka. Driving license is there for driving. If you drive without license, it's a charge. But with this 2018, one of 2018 FIU rules for the first time, they have introduced this driving license requirement. But if you go and tender that driving license to courts, I'm 100% sure you'll be thrown out from the courts. Because driving license is not an identification document in Sri Lanka or any other country. It's just there for driving. The identification, valid identification, acceptable identification documents from the law are NIC and the valid passport. But bankers, they used to take this driving license. Simply customers say they don't have the NIC. So the point is where, why you take this NIC, driving license, Dennis? Any reason? When I say, okay, I don't have the NIC, you will request me my driving license. Any particular reason that you request this?
Because the address proof, if the proof is there, it has mentioned the address instead of the passport. When you take the passport, there is no any address column in passport.
Okay. Yeah.
That's why we are requesting the driving license.
You get the NIC number is also there. That's the argument. It's a common argument given by bankers. Okay, we have the NIC number.
Yes.
Yeah, that's the main reason. Rather than the address verification, you get the NIC number. How do you know whether this NIC number is right? If you in today's context, there are a lot of duplicates in the system. If you want this MBBS certificate, it's a matter of just spending 100,000 and preparing a duplicate. If you want this IBSL certificate, it's a matter of 50,000. NIC for 5,000, you can get it. If you want to send your kid to a leading school, there are people who will prepare all the documents for 100,000. So I know that your job is not a CID officer's job. If you don't have a proper NIC, you are not suitable to be a Sri Lankan. That's the argument. And top of that, if tomorrow all the bankers, they insist on the NIC, people will bring their NICs, updated NICs. Because today what has happened, we are not insisting, the country's law is not insisting people to update their NIC. As a result, they bring this driving license. So I will, my discussion is based on the correct document. Maybe that you all have internally a lot of different practices. That's up to you all. That's no issue. Sri Lankan context, valid NIC, valid identification documents are NIC and a NIC that you can see and identify, and a valid passport during that particular period, a valid period. So those are the two identification document. If there is any difference between the address, definitely you have to have a permanent billing proof, electricity bill, water bill, or land telephone line bill. So from that, we will establish this person, okay, he is residing in this particular address. And if something goes wrong, we know his address, permanent address, and we know some details about that particular customer. Now, if you see the finance companies, leasing companies and finance companies, they have a very good practice. They always, when they Sampath, your mic is on. Sampath.
But the thing is,
Yeah. Yes, Dennis. Yes, Dennis. You wanted to say something? Dennis?
but the thing is, according to our circular,
Sorry, there are disturbance, Dennis. You're not clear.
Issued by the bank and central bank.
Sorry, I couldn't. You're not clear. Your line is not clear, Dennis.
According to
Your line is.
our circulars, which are issued by the bank and central bank, the driving license. Okay. Hello. Yeah.
Yeah,
No,
yeah.
I will.
Sorry. Okay, we missed it. Right. So as I told you, but I think what he wanted to raise is that under the central bank rules, driving license is acceptable. Yes, driving license, as I told you, one of 2018 FIU rules, they talk about a driving license, like because of that, now it's a acceptable documents for the banking sector, driving license. But my point was, it's not a valid identification document for the courts. Legal system, for the legal system, it's not a valid identification document. For driving as well as for, especially because of this banking rule requirement, you all can, the customers, they can use this driving license. That's fine. Okay. So you get this sole proprietorship, individual sole proprietorship, partnership, and companies. And when an individual wants to open an account, definitely will ask for all the documents what you stated there, and you fill the mandate and you open the account, right? So you have different approaches. Sometimes the banks, they give their they open the account immediately. Some banks, they open account at a later stage after checking whether the KYC is in order. So many different practices are there because of this competition. Now, when you come to sole proprietorship, who is a sole proprietor? Who is a sole proprietor? Can someone tell me who's a sole proprietor? Shan, who is a sole proprietor?
A person who owns a business. The particular business has only one owner.
Yes, single person running a business.
Yes.
I'm the owner, I'm running the business, right? So simply you will request once again the NIC. If there's any difference between your business and address and the NIC, you will ask for the billing proof, and you will ask for the registration, business registration. Now, once again, this business registration, what I have seen is the banker's practice is where you get a copy which are not certified by the divisional secretariat. So normally, if you want to form a sole proprietorship or a partnership, you have to register at the divisional secretariat or Pradeshia Lekam Karyalaya. So what I have seen is sometimes we see copies are there, but those are issued in maybe 2020, sorry, 2000, 2010. Now already 11 years have passed or 21 years have gone, but still you have your copy. What you take today to open the account is an old document. So please don't do. If possible, request the customer to tender a certified copy from the divisional secretariat. Then you know that all information, because sole proprietorship and partnership are businesses where they continuously change their model, Their nature of business, partners get changed. So you should not take a risk out of that. Make sure that you get an updated copy issued by maybe that they have formed their business in 2010 or 2000. That's fine, but the divisional secretariat must issue an updated copy. They will issue a copy, certified copy, true copy, and they will place their seal, and it has to be come to your records, updated copy. Then you are sure that they have given you an updated copy, and all whatever the details which are there are updated. That's a important requirement. Don't take old copies, right? Now, who may sign? Now, when you come to signatory, it's also important when you come to business, corporate or corporates or non-corporates. Signature is the authority of the customer. Now, we in theoretically we denote signature as the authority. Now, if you are going to forge my signature, right? So, and for an example, someone is going to place my signature and tendering a document to the bank. We say a check, right? I have an account with HNB, right? Someone has stolen a leaf and placed my signature, and he is tendering it to the bank, and cashing will say 100,000. Now, who is responsible for this check? Yes, who is responsible for this check?
The bank. So,
The bank. Yes, the bank is responsible. Why you say the bank is responsible? Why you say the bank is responsible? What is the reason? Bank is, yes.
because the bank should be authenticate the signatures, sir.
Now, if you see, okay, forged signatures, it's 100% in line with my signature, or that signature is better than my mandate signature. Now, as a banker, how do you know whether this is a forged signature or not? It's almost the same signature or better than what is there in the mandate. So you go through, okay, you check signature authorized, and the officer has gone through the mandate and done his initial as well. It's 100% the perfect signature is there. If the signature is still the same, but are you going to say your answer is different, or your answer will be the same? Yes?
Same answer, sir.
Same answer. Yeah. Your answer is right? Maybe that it's 100% perfect or better than what is there in the mandate. Okay. But still, the banker has paid on a check without customer's authority. My authority was not there. You have paid a check against my account without my consent, without my authority. So the banker will be negligent for that. So that is why if you want to get the protection under the bank bills of exchange ordinance, you have to prove that you have acted without negligence and with due care. Now, proving without negligence and with due care is a challenge, right? Because of this competition, sometimes the bankers, they act negligently. Due care is not there. Their focus is different. They are not focused for their activities. They are focused for something else. Right? So the point is so you can say it's due to my negligence it has happened. So you have to prove your position. In essence, you have to prove that you are not related, you are not responsible for this transaction. Then you have to show my negligence. So proving my negligence is not easy. I can intentionally do that, right? So finally, you have to end up that with a handwriting expert and see whether it's my signature or not. So the point is bankers, they have to be very careful in their activities. Signature is the most important element of the banker. You are getting my signature on a piece of paper, and you are looking at that particular signature, and you are honoring or doing all my transactions. Or simply you are handling my portfolio with that small piece of paper which contains my signature. So if you see that my signature is not in line with the mandate signature, you have to inform me. Your signature is weak, or your signature is not in line. Update your signature. That is the responsibility of the banker. Maybe that I have initially, when I'm opening the account in 2020, 2000, my signature was more focused one. Today, with my maturity and with different reason, I'm just placing the signature, which is not in line with my original signature. Maybe that you know the flow, but it's against, it's not in line with my mandate signature. So you all have to be very careful with regard to the signature. If you see there is a difference, immediately you have to inform. And top of that, under the bills of exchange ordinance, it says you not only when you come to a check, payment of checks, you have to understand my pattern as well. Who are my pays? What is your average range, right? Or what is the normal amounts that I issue? There are a lot of responsibilities which have shifted for the banker. Earlier banker customer relationship, customer's relationship, now it has shifted to the banker. So when you come to signature, customer can place his signature, or his power of attorney also can place his signature. Who is the power of attorney? Who is the power of attorney? Desha, who is power of attorney?
Sir, from the law itself, there another person is appointed to sign on behalf of the original customer.
Yeah, okay, right. So in my absence, I'm appointing someone else to act on behalf of me. So he is acting on behalf of me. Now, if tomorrow, if my spouse brings a power of attorney, assume that I'm a customer of your bank. Tomorrow, my wife is going to bring a power of attorney and producing it to you to say, okay, I left the country for 1 year and I gave my power of attorney to her. Now she wants to deal with my account or handle my account. What are the steps that you will take? Yes, Desha? How do you handle my spouse? Handle my wife?
Uh, First should check the power of there's this legal document power of attorney. It is like given by the lawyer, signed by the lawyer. That should it says that on in the absence of the customers, should all the transactions should be signed on by the person who's giving, like the power of attorney is given.
Okay.
And then
What else?
um,
Desha, can you give an introduction? Which bank and what is the area of your work?
sir, I was there last week. I'm
Oh, you were
working
there.
I'm working for commercial leasing and finance at
Okay,
operations.
sorry. Okay. Sorry, I miss you. Right now, okay, what you say, what you told was, okay, you will get hold of this power of attorney, and you are going to check whether the authority was there. Is it adequate? Dennis, is it adequate? Are you good?
No, it has to be registered under the Registrar General Department, the power of attorney. Otherwise, according to my knowledge, it's not legalized.
Okay, what else?
And the other thing is we have to obtain the affidavit from the original customer. Not actual original customer, from the attorney. This power of attorney is still in force.
Okay. What else?
And yeah, because and the other thing is anyway we are checking whether this is a special power of attorney or general power of attorney.
Okay.
As bankers, because special power of attorney, they have mentioned some special areas to be executed.
Yes.
Those kind of things that we are looking.
Okay. Now, if my wife brings you a certified copy, certified by a lawyer, and she might say this original was given to another bank, are you going to accept that, Dennis?
No. Anyway, she has to provide the original power of attorney.
So without the original power of attorney, no, you if it is a general power of attorney, you can't request that general power of attorney because she might be using the same power of attorney for all other banks. So the point is,
but she can provide the original one to us because I mean we are getting the copy of that power of attorney, the original copy or the copy of that power of attorney. But the original, she has to keep the original with her to showing to the other purposes.
So if she brings a certified copy certified by the lawyers, what is your practice? And if she is going to say, okay, this already original is already with X bank, and what is your approach? Yes. Will you accept that?
If it's certified,
There can
we
be
have to get
deviation. Yeah, there
yeah.
can be deviation. Right. So once again, it goes with KYC. If you know her, if you know the relationship, if you know me, if you know so and so is my spouse, yes, then you have some better control, right? If you don't know, this KYC is knowing the person. So not KYC is not only for this customer, you should know your partner as well, KYP. If you don't know your partner, your marriage will end up with a divorce. Know your friend, KYF, right? So it goes with the relationship what you have with me and my spouse, right? As a practice, you have to get hold of the original. Whatever said and done, maybe that you know 100% me, my spouse, fine. It's a responsibility of the banker to get hold of the original. And at your cost, you take a photocopy. Then return the original back to the customer and certify original seen by whoever the authority. Because that's important. Then you know that you are going to deal with the original power of attorney. Here what happens, a certified copy will come. You don't know whether this law is existing or whether this seal is a genuine one or not. If you go to Mallatta Street, Peta, you can have any amount of seals just for 100 rupees or 200 rupees. So we don't have to take that risk. We don't have to act as CID officers, understood, but make sure that you get hold of the original, then you have seen the original. After that, just see whether there is authority for her to enter into my account. Fine. If that authority is there, normally power of attorney registration is not a must. Local power of attorney registration is not a must, but the financial institution as a practice, they insist. So when you come to bankers practice, you get bankers theory as well as practice. As bankers, we have created a practice. Now it has become the law of this country. Top of that, you get the law related to banking, law related to practice, law related to banking. Law related to practice has created certain important principles, which today even the courts are accepting it. Top of that, you get the law related to, law related to banking, right? So it's an important. So all local power of attorney registration is not a must, but if it is a foreign power of attorney, within 30 days, receiving from Sri Lanka, you have to register it to make it valid, right? It's a requirement. But bankers, they insist on registration because that is the only control for them to see whether this is a registered document. And top of that, you told that you are getting an affidavit confirming that this power of attorney is still in force. You are getting that power of affidavit from the customer or from the power of attorney holder. You should get the power of affidavit not from the power of attorney holder. You have to get that from the principal customer or the principal. The power of attorney comes from the law of agency. Principal is the customer. Power of attorney holder is the person who is bringing the power of attorney. We call him as the agent. So you have to get this affidavit from the principal or your customer, not from the agent. What I have seen is most of the bankers, they take this affidavit from the power of attorney holder. And how do you know whether I have given the authority or not? Right? If you want to know whether I have given the authority, I have to declare that. I have to give this affidavit, not my spouse. So the point is where if someone prepares a forged document and he or she is going to bring it to the bank. For an example, I have 10 million in my account. I have gone abroad. Someone knew that there's 10 million in my account. In my absence, they will prepare a forged power of attorney and he or she will give a forged or affidavit which contains wrong information, and finally they will take the money. So what is the control that you have? You're responsible for me, not for my power of attorney holder. I have never ever given you an affidavit to say that I have appointed so and so. So the simple argument of the bankers, no, the customer has gone. So it's my responsibility to appoint someone before I leave the country. If I have not done, no, I can't do business. Either you have to use online type of transactions or forget about my business transaction. It's my responsibility. Don't now. What I have seen is the bankers, they try they try to help customers which are not in their directions. That you are getting a lot of problems because of that. But they say, the bankers, they say it's a customer service. No, it's not customer service. You're violating and you're taking a huge risk and helping a customer, helping an unknown person to withdraw money from my account. So you're in trouble, not me, right? On a particular day, if I come and say, I will prove that I have never given a power of attorney and I don't know so and so, why you allowed me, he or she, to take my money? So be careful with this true power of attorneys. You can have a lot of fraudulent transactions. Once there was a case, at that time I was executing these mortgage bonds. There was one customer where our bank customer is purchasing a land and we are giving the facility for the purchase, for the transaction. Then the seller was selling the property through a power of attorney. So our customer is purchasing the property, we are mortgaging the property. Seller is selling the property through a power of attorney, or a power of attorney holder is signing for the seller. So our practice was initially, until the title is okay, we request for the certified copies. We don't collect the originals, because if the property is acceptable for us, if the property, the facility is approved, only we collect the originals. So when the documents came to me, if the title was okay, no problem. Power of attorney was okay. There was authority for the party to sign. Everything was fine. So then the facility got approved. I wanted the originals, and the lawyer told, no, we can't give the power of attorney. They have given to another bank. Same old story. So, but I told, no, I want the original power of attorney. It's a matter of just for 5 minutes. I will take a photocopy and I will return back you the power of attorney. So, but then the lawyer was a little bit arrogant with me, and she was talking about the law and so many other things. She told that she is going to report it to me. I said, no problem. If you want, you report. That's she has the right to do that. I said, no. But on a later stage, they forwarded me the original. When I went through the original, there was no authority. So what has happened? They have taken the first page and the last page from that particular power of attorney, and in between pages, they have created 2 pages to say that there is authority. Right? So if I accommodated that, going beyond the controls what we had, right? Our customer is not getting a valid title. Our mortgage will have issues. Maybe sometimes I will lose my license as well. So be careful. Through power of attorneys, you can do anything. By using a power of attorney, don't activate a dormant account. If you're activating, make sure that you are activating to the correct person. And all of a sudden, if there are withdrawals, you have to be very careful. So normally banks, they don't allow to activate a dormant account through power of attorneys. So as I told you, please make sure that you need to get the original. Any documentation, any document, you have to get hold of the original. And if the customer says, I want this document for other transactions, fine. You take a copy at your cost. Don't try to save there's 2 rupees or 10 rupees. Get the copy at your cost and return back this original, and go through that document to see whether there is authority, whether it's special law, whether it's general. If the authority is there, yes, request the principal customer or the principal to give an affidavit confirming that this power of attorney is still in force, and then proceed. So you all have to be very careful with regard to this. Now, who may sign? It can be the customer or power of attorney holder. Right. Now, do you all have a practice? I'm a little bit discussing very basic things. What I have seen, the bankers, they don't follow these basic principles. As a result, sometimes when you go to court, they will lose the case because the common sense approach is not there in the financial sector employees. They are more concerned about the IT, they are more concerned about the technology, but getting in the, they don't know the importance of the signature. They don't know the importance of power of attorney, how to handle the power of attorney. So those are fine. You should know the technological side, everything is fine. I have no argument on that. But at the same time, we are running our business with common sense. For you to be an effective banker, there is no requirement of qualifications. So this is the only profession where you can enter, where you can continue, and where you can retire without a qualification. All other professions, you have to have the qualification to enter. You want to be a lawyer, you have to get through the bar exams. You want to be an accountant, you have to get through the Chartered Institute account exams or any equivalent qualifications. Doctor, medicine, MBBS. But bankers, no qualification. You can enter, you can continue, you can retire. No restriction. Only thing, you will not get promotions during your stay, right? So the point is where you have to be very careful with regard to this common sense aspect. Now, now if a customer is signing in Sinhala, do you all have a practice? Now customers can sign Sinhalas, they can sign in English, Tamil, or a symbol or something that you can't understand. Now, do you all have a practice if the customer is signing in Sinhala, where you use a seal and get his signature? Dennis, what is your experience? Dennis?
Yeah, I didn't get your question properly.
Yeah.
So,
now, if a customer is signing in Sinhala,
okay.
what is your approach? I'm signing Lasantha Senaratna in Sinhala.
Okay.
What is your approach? Do you place a specific seal underneath my signature, or you accept it as it is?
Yeah, we accept as it is because it's his signature, no? So we can't ask him to sign in English, no?
Yeah, right. Okay, Shan, anything that you add? Shan, any additions that you have for your signature?
No, sir. I will accept that. That's his
Yeah.
signature. I will accept
Okay.
that.
Okay. Do you place a seal to say ihata karnu terungana sankara or something? You all have a seal?
All right,
No.
we have such a seal. Yes. No, we have
Yeah.
such a seal.
Okay. Yeah, some banks they have, if the customer is, why you place that seal? Because I'm signing in Sinhala. Is that the case? Yes, Dennis?
If it's an English document, yes.
Yeah, if it is English, so if I'm signing in Sinhala, you place that seal.
Yes.
Right.
Yeah.
Okay. Now, if Mrs. Chantika Bandaranaga Kumaratanga is coming to open an account in your bank, she's signing in Sinhala. Are you placing that seal?
No, again, it's KYC.
KYC, right? You know. Okay, we'll say he's a PEP. Forget about he's a PEP. Right now, your chairman is he signing in Sinhala or English?
English.
English. Okay. Any directors who are signing in Sinhala? No, no idea. We'll say a prominent character. We'll say okay. Now KYC. We'll say a new customer is coming to open an account, right? You know that he is a doctor. Okay, he has gone to Oxford and he got his MBBS, everything, but he is coming for the first time to open an account where he is signing in Sinhala. How are you going to place that seal?
No.
Yeah, okay. Now, if the customer is signing with a symbol, okay, my signature is a star. I can sign with a symbol. So I'm placing a star. Now, what is your approach?
We can't accept it.
Why?
As symbol, as a signature.
Why? What is the reason?
it's a rule and it's a law, I think.
No, even a symbol can be a signature. If I'm going to put a tick and say this is my signature, that's my human rights. You can't say that you're not accepting my signature. What you can say is it's a weak signature, so then you take the indemnity. Even for the indemnity, I'm going to place this star. So the point is you can't insist on a customer to change the signature. Whether it's a symbol is also a signature, right? Can be single English, Tamil or any language or a symbol. So you can't say that we are not going to accept it. So then I will say, okay, I'm not going to open the account with you. That's it. Maybe I'm a good customer. Okay, I have millions. If you are going to say, okay, we are not going to accept my symbol as a signature, that I have the right, I have the legal right to place a symbol. So what I see is now, if a customer is signing in Sinhala, placing this seal to say, Yata Karnu Terungana Sankara is wrong. How do you know the people who are signing in English, whether they can understand what is there in the document? What is the assurance that you have? Majority of the people are signing in this country in English, but they can't read or understand what is there in the form. So my advice is, rather than using a seal, better you request the customer to write on his own handwriting, I agree with the above terms and conditions, or Yata Karnu Terungana Sankara, and ask him to or her to place his signature. Then everything is covered. Rather than depending on a seal which are not relevant, which you cannot justify in court of law. There are people who are signing in Sinhala, right? Example, Mrs. Chandrika Bandana Kumartunga, she went to Oxford College, Oxford, UK, Oxford. So we can't say that she doesn't know English. So these are important things, but when you go to court of law, they will ask questions. So then your practice is wrong. What is more prudent, request the customer to write on his own handwriting, or I agree with the above terms and conditions. Now, if the customer is signing in Tamil, do you have another seal? No, you don't have. So you're not catering to all the signatures. If the customer is using a symbol, you don't have a seal. So be careful. These are important. I told you the signature is the authority. If you don't get the proper signature in line with the requirements, you are in trouble, right? So a power of attorney holder can sign, or the principal person can sign. Any questions up to now? Any questions? No? Right. Then comes who may sign. Method of typing. In case of a sole proprietorship, you have to follow the following method. A, that's the individual name of his personal address. Sole proprietor of the business carried on at business address under the name, business name. So this is the correct way of typing documents. So make sure that you follow all these steps. Individual, name, address, business address, and the business name. Don't deviate from that. It's very important. It can be an offer letter. It can be a loan agreement. It can be a legal document. It has to be in the same form. Don't deviate from that. Right. Partnerships, almost a similar set of documents. Partners, NIC copies, partnership registration. In case if the partner's address and his residence address or something to if you need any billing proof that you have to get. Do you want this partnership agreement? Do you insist on this partnership agreement? Yes? Any bank that is insisting on the partnership agreement? Yes? Shan, do you all insist on the partnership agreement?
No, sir. We do not insist.
Okay.
Yes.
I cannot remember whether this FIU rules whether they have specified the requirement of partnership agreement. If they have insisted on the requirement of a partnership agreement, it's a must. So it's an agreement between the two or more people Partnership is where two or more people running a business with a view of earning profits. So there are two or more people. In case of trading business, that is buying and selling, the maximum will be 20. But if it is a profession, a doctor, lawyer, accountant, you can have any number. There is no limitation. Why these professionals they open partnership? Why can't they open this limited liability companies? Any reason? Why these professionals will say lawyers? They can form only partnership. Can't they open a company? That's the normal practice. Any reason? Subhashana? What's your view? Subhashana? When I call from your name, please, I'm expecting you to give an answer. Subhashana? No, don't tell me all of you all have issues with regard to your mics, right, or cameras. It's a normal, it's a normal answer that I get. Either there's a problem with the mic, there's a problem with the camera, which is not acceptable because majority of you are using smartphones. Right, Subhashana? Subhashana is silent. Supun, what about you? Yeah, any reason why these professionals, they use this, they form partnership? Why can't they open a limited liability company?
For the security, sir.
For the security, what do you mean by security?
When two parties are together, then they can invest and start up the more. They can invest on the more assets.
No, it is to make them personally liable. If you form a partnership only, we normally say in the case of partnership, partners are joint and severally liable. What is joint and severally liable? Jointly together or several. Now, for an example, if there's a partnership A and B enterprises, A and B are partners. They have borrowed 100,000 from your bank, right? If they have defaulted, now if it's therefore the partners will be joint and severally liable. So if the partnership can't pay, A and B jointly, that is together, they are liable for 100,000. At the same time, if A can't pay, B is liable for 100,000. That's several liability. If B can't pay, A will be liable for 100,000. So for you to make them personally responsible, it has to be a partnership. Companies, you can't make them personally responsible because company is an artificially created legal person by the law. So the name of the company is the legal person. You can't make directors personally liable if you create a company. But there are exceptional situations where maybe that they have some with undertaking. There are there are professionals who have formed companies as well. But majority, if I'm giving advice, if I'm giving legal advice to you, I have to form a partnership. Majority of the legal firms are in Sri Lanka, and accountancy firms are partnerships, but not limited liability companies, to make them personally responsible, right? So who may sign? Once again, if there are 20 partners in the partnership, and can they give power of attorney to one partner? Yes, if there are 20 partners, Sean, can they give power of attorney to one partner?
I think yes.
Yes, then
Yes.
how many, now if there are 20 partners, if you are signing a mortgage bond, how many should sign? Is it 20 or 2 or 1, or can they give credit instructions for that?
It depends. I think one can sign. For
Yes,
the
any different answers? Yes, Dennis?
I think all 20 has to be signed because this is jointly and individually liable.
Yeah.
They are holding the individual liabilities.
Yeah, in order to make them joint and severally liable, all partners should sign. They can give a power of attorney, but then the power of attorney holder must sign 20 times. He has to sign. He has to sign. Power of attorney should sign on behalf of A, on behalf of B, on behalf of C, on behalf of D. So there will be 20 signatures. Normally, when you're appointing a power of attorney to a partnership, always appoint an existing partner, right? So then you can get 2 or more people running a business with a view of earning profits. Running a business, that particular power of attorney holder also should be in the business for them to know what's really happening. If you're going to appoint an outsider may on a later date might say, look here, I was not aware about this particular business, but they wanted me to appoint as a power of attorney holder. The concept of firm comes with that. So the power of you can appoint a power of attorney, but you have to place 20 signatures, right? And method of typing, A of that A partner's name, A partner's address, B of B partner's name, his address, carrying on business in partnership at business address under the name and style and firm of the partnership name. So if there are 20 partners, you have to type all partners' names and addresses along with the business name and the address. Now, when you're issuing an offer letter to a partnership, how do you address? We'll assume there are 20 partners. AB Enterprises is the partnership name. How do you address to the offer letter? Yes? Yes. Thangaraja, how do you address? I don't know, you are registered under that particular name. So I'm calling from the name, but I can see. Yes. Thangaraja, what's your answer? If there are 20 partners, how do you address anyone who is handling credit?
AB Enterprises and others, sir.
And others. Okay, any different answer? Sandhya? Sandhya?
Registration address, sir.
No, you have to address the party. No, address is fine. Address is there. Number 10, Gall Road, Mount Lavinia. Okay, the partnership. Can you issue the offer letter AB Enterprises? Yes.
Yes, sir, I think so.
Yeah. Shan?
Partners, the partnership name.
Yeah, partners of AB Enterprises and the address. Because the partnership name is not a legal person. You can't address, because if you go to courts, you can't purchase a land. If you can't take action against the partnership name because it's not a legal person. But you can take action against the partners. Partners are the legal persons of a firm. So you have to address the partners. Partners, AB Enterprises, and the address. Best would be type all partners' names, but it's due to restrictions you will not do. But make sure that you address to the correct party. With the legal, you have to address to the legal person or persons, not to the firm. You can't address to the firm, right? So partners, AB Enterprises. Good. Right. Any questions? Any practicals? Once again, if you are asking for the certificate registration, you have to ask for a certified copy from the Registrar General Office. Don't proceed with the transaction without getting the updated certified copy of the business registration. Any questions? Yes, Sampath.
Sir, what's the meaning of method of typing?
Sorry, insider?
No, what's the meaning of method of typing?
Method of how we are going to type the document. If you are giving a facility to a partnership, right? How are you going to type the document? You have to address.
Address.
Yeah, address or address in the party. That's method of typing. Okay, any other questions? No. Right. Fine. Yeah.
Where that partnership should be registered with not with what you mentioned was that it should be
Divisional Secretariat.
a division.
Pradesh Lekam Karyalaya.
Okay. Not with registered general.
No. Not the power of attorney has to be registered at the Registrar General's office.
Okay.
Business registration each area. If you're starting a business at Mount Lavinia Divisional Secretariat.
Okay.
Right? Okay. Now companies. What do you know about companies? Now all your business entities are companies, artificially created legal persons. So company, why this company came into the system? Earlier people started business individually, and they realize, okay, if something goes wrong, they are personally responsible. And top of that, there is no business nature, right? If I'm going to start a business on my own, we say trading business, I can open a small shop, and I can, without a name, I can run the business. So then if something goes wrong, I'm personally liable, I'm responsible. And at the same time, there are restrictions for me to increase capital, because we need capital. We need money to expand, because whatever the money I have pumped, I don't have much money. So then the people thought, okay, we have to find another better way. And they formed this sole proprietorship to give some legal background, to give some business nature. And though we consider sole proprietorship as a business nature, but the sole proprietorship is not a legal person. Once again, the sole proprietor is the legal person. Then people thought, once again, there are limitations in that as well. If something goes wrong, the sole proprietor is personally liable, and you can't raise capital. There are a lot of limitations. Whatever the amount that you have, only you can bring. There can be restrictions when you try to borrow from a financial institution. Okay, then the people thought we have to find another way to expand this business nature. Then they introduced these partnerships. 2 or more people running a business with a view of earning profits. So you can, in case of trading business, you can have 20 people. You get more knowledge. 20 people will contribute. 20 people will bring money. So then the business volumes, capital, information are higher. But still they realize when you come to liability, they are unlimited liable. They have to pay everything from their personal debt, their personal assets, and it's unlimited. So then people realize, okay, why can't we introduce a business which has some kind of a limited liability? Then only these companies were introduced into the system. Limited liability company. What do you mean by limited liability company? Yes. What the term says, limited liability company? Yes. What is a limited liability company? Alison? Alison, what is a limited liability company?
You're liable only for a part, maybe the shares or whatever it is.
You're liable only for the shares. Can you improve that particular answer? There, you're somewhere there, but can someone improve that? Yes. Can someone improve? No.
Shareholders.
For the capital.
Shareholders. Yes, Alison, they are.
The capital that you put, you're liable for the capital amount or whatever you put into the business.
Okay. So if the company goes on bankruptcy, you will lose whatever the amount that you have invested in that particular company. If you have purchased 1,000 shares into 10 rupees, that's 10,000. If the company goes on bankruptcy, insolvent bankruptcy, insolvent means you can't pay your debts. That's insolvency. You're not solvent. Solvent is where you can, it's going concern, you can pay your debts. Insolvent bankruptcy situation, if you have responsible for the stuff the particular but in case of a chip or don't have partnerships to the use of particular business.
Excuse me, sir. Can you repeat again,
Yeah.
because it was not clear. The signal was not clear.
Okay.
So still the problem remains. We can't hear properly.
Okay. Now just see, I have off my camera.
Now
it's
fine.
fine.
Now can
Now okay, sir.
right. So if you have invested in a company, if the company is there, some in certain instances. Sorry, yes, Kavindra.
So some problem is there, no?
Yes, Kavindra.
So some problem is there. I think.
Yeah.
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 It is same, sir.
See whether you can hear me. Now okay.
Yeah, now it's okay.
All right. Okay. Right. Okay. Right. Sandhya, can you off your mic, please? Right. Fine. So in case of a company, if you have invested in that particular company 10,000 rupees, in case if the company goes on insolvent liquidation means your assets are not adequate to pay your liabilities. Right? In such an instances, we call insolvent. So if that company goes on liquidation, you will lose your 10,000 rupees. That's it. You are not liable for anything else. Right? So that's the maximum that loss for that particular individual. But in case of a sole proprietorship or partnership, you have to sell your personal assets and settle the dues of that particular business. So that's one of the major differences between a company and a sole proprietorship and partnership, where the liability goes with your investment. If you have invested 1 billion, in case of an insolvent liquidation, you are losing 1 billion. Right? So that's how this limited liability concept was introduced, to make people's liability limited. But there are practical issues with regard to that as well. I will discuss those later. Any questions up to now? Any questions up to now? Is it clear?
Sir,
Yeah.
I have a question with regard to partnership.
Yes.
That is, if there are three partners, only one can sign for checks or any other instrument. Can he sign for other documents also as the only person, or can all others have to sign like for standing orders?
Yeah. There are two things. One is the credit instructions. The other one is the documentation side. Now, in case if you're giving a facility to that particular partnership, all partners should sign. But the partners can pass a resolution or to give them some instruction with regard to credit instructions. Credit in the sense to issue checks. They can say any two partners or one partner or A on behalf of the partnership. So there are two. Don't miss these 2 points. One is the credit instructions, while the other one is the documentation. Making them personally liable. If you want to make them personally liable, you have to get all party signature. But for business purpose, when you come to credit instructions, they can give instructions to the bank. All three partners must sign and confirm A is authorized to sign, or B is authorized to sign, C is authorized to sign. So don't mix these two. They can have credit instruction is where to issue checks, day-to-day activities. But if you are creating a charge or mortgage and giving a facility, all partners should sign. So I don't know what is your concern. Maybe that they are issuing checks with one partner, whereas if they want to get a facility, definitely all three partners must sign, or they are power of attorney holders.
So in case of if they want to apply for internet banking or may place a standing order, they
all partners should sign.
All should sign.
Because the reason is where now you're creating a liability over the others also. Right? With now, for an example, you, me, and Shan are partners.
Okay.
It's true that you two have given me authority to sign checks, but you two have not given authority for me to go for an internet application. Right? All partners should give that, because you also should know, Shan also should know that I'm going for a what you call a internet relationship. But if the partners give you instructions, any banking transaction, right, with regard to required for day-to-day operations, then you get a blanket cover for that. But my preference would be better since you are maintaining a fresh contract, it's a new contract. Internet facility is a new contract. Earlier you had a contract to open an account and issue checks. But now you are entering into a new contract. New contract, all partners should sign. Then the others can't object it. Because if others thinks, okay, if Shan says, no, there's no requirement of internet connection, banking facility, because it's not a requirement. How do we know? So advice for you, if it is a new contract, which you are going to give a new facility, new product, new service, all partners should sign. I think that is the best approach, rather than dividing it from credit instructions and documentation. If it is new, yes, but issuing checks based on the instructions, you can honor checks. Now, for an example, if you want to open an account, initial mandate, all the directors should sign. Without all directors' signatures, you don't open the account. But directors later, they can authorize one or two directors or accounts manager to issue checks. Similar approach should come here. Okay?
Okay. Even for standing orders, all should sign.
Standing order goes even now. Standing order, it's a new contract, no? Better you get now. For an example, we three are partners. I'm going to without you and Shan's consent, I'm going to give a standing order, and I'm instructing your bank to give a standing order to say that every month transfer 50,000 to my personal account. Now what happens? Don't you think there is a problem in that particular standing order? Because I'm getting money from the partnership business to my personal account.
Other parties don't they have a responsibility to take their statement?
Other partners don't have?
Don't they have the responsibility to check their accounts?
You can't say that the other partners don't have the responsibility. All partners are equally responsible. It's a joint and several liability. You can't, today you don't have active partners, silent partners, all are partners. Right? So no partner can say I'm not responsible. All are equally responsible. If something goes wrong, if we three are the partners, if I'm going to do something, you are responsible, Shan as well responsible equally. Right? So advice is get a fresh contract. If it is a new contract, a new product, new service, get all partners to sign. Then they can't object on a latter part. Otherwise, what will happen? You have not taken the correct process. You have not taken the consent of the other two parties. Even the standing order is so important. How do we know whether I'm trying to draw money and send it to my family business or family expenses? If you two say yes, no problem, then all of us have consented for me to transfer 50,000 for my family commitment. But without you two signature, I can't do that. Right?
So my question was that let's say we only one partner has signed and credited to his personal account since he is authorized, but others can know that from his their statement.
How do you now? Okay, for whose email address you are sending now? You don't sell physical what do you call statements, no? You send email statement, e-statements. Now, whose email is given for you to send the statement? Is it the person who is dealing with your bank?
Yeah, so usually.
Yeah, so it's most probably he is not showing the others. If you are sending the e-statement to the other two partners, yes, you have a point. But in court of law, very clearly now, the banker's main argument that you are sending me a statement and I have to go through, and if there's anything you have to inform within 7 days or 14 days. When you come to law, there is no requirement for the customer to go through this statement. If straight away, if I'm going to put it into the dustbin or put it into delete your mail, still I'm protected. You are a reputed organization. You have to make sure that you protect my interest. You need to maintain my account properly. You're a financial institution. If I'm going to go to court and say, look here, sir, I never went through the statement, I straight away put it into the dustbin or delete it without checking, court will protect my interest because you as a bank must protect my interest. So sending the statement to me will not serve sending to the others. Others don't know anything about that particular transaction. So be careful. These are important points, but you are in trouble if you don't follow the correct process. Okay.
Okay.
Any other questions? Any other questions? No. Right. So I'm 100% sure you have questions, but you don't want to raise your questions because you have realized some of the practices what you all are doing currently are wrong. Right. That may be one reason where you don't want to discuss. Rectify maybe that something has happened in the past. Forget about the past. But from tomorrow onwards, you make sure that you use the proper process. So companies are artificially created. Can you see the slides? Can you see the slides?
Yes, sir.
Okay. Companies are artificially created legal persons. So law has given authority, but a company can't run its business without stakeholders. Now, if you take your companies, individual companies, limited liability companies, so your company is a name board, artificially created name board. You have to have shareholders, those are the owners, directors appointed by the shareholders. You have to have employees, customers, suppliers, lending institutions, local authorities. Now, without all these parties, you can't drive your business. So definitely in the existence of a company relies on its stakeholders. No company can survive without its stakeholders relationship or the contribution, right? So it's a important and material requirement, right? So the history of company law in Sri Lanka, this 7 of 2007 was based on New Zealand and Canadian law, but the previous one was based on UK law. With the new, why we went for this New Zealand and Canadian, they have a simplified type of a version. We wanted to simplify our process as well, especially large companies must have a much more responsible approach. Small companies will have less compliance requirement. And as a result, we changed. We thought, okay, it's outdated and we wanted to move for a fresh one. But at the same time, we have taken some principles from the UK as well. Almost similar types of rules and regulations are there, but more practical type of, we wanted a more practical approach. That is why we went for this New Zealand and Canadian law. With this new Companies Act, there were a lot of changes were introduced, and the whole idea, they wanted to simplify the registration process and increase more liability towards the directors. Now, with this Companies Act, some bankers, they have changed their practices, but unfortunately, bankers have not understood the basic principles which were introduced from this Companies Act. And sometimes they say, okay, it's not required. Now, for an example, now common seal of a bank, what is that? Sorry, common seal of a company. What do you mean by a common seal? What is a common seal? Yes? Udesha, what is a common seal? Alison, do you get? Yes. Yes, Udesha? What is a common seal?
The common, we have like that, how it is.
Okay. Yeah. Alison, have you seen this common seal of your company?
That's with the name of the company with the registration number.
Okay. Do your chairman sign for this common seal or the common seal book, sealing book? No.
Sealing book?
Yeah. Where two directors or director and secretary sign? No.
There is a sealing book with the documents, description, and the two when a director signing the document, he signing in the signing book as well.
Yes. So there is a circle round type of embossed seal, and in front of that, two directors or director and secretary will sign. Right. So what is this common seal? Anyone? Common seal or the embossed seal is the signature of the company. That is the signature. Then what are these two directors or director and secretary doing? They are witnessing this common seal. They confirm that this common seal is placed in our presence. So normally what happens, sometimes it won't happen on the same time. One director is signed yesterday, the other director is going to sign today. So there is no uniformity in that particular process, but if you are correctly speaking, you have to place both signatures at the same time in the presence of that particular, at the same time in both presence. But in practical sense, it won't happen. So the danger is where if you are not taking where if the articles of association says, in the case of a company, the articles of association is the basic document to give instructions or to lay down principles with regard to the rights and duties of shareholders, rights and duties of directors, and their responsibilities. Everything is there in the articles of association. Right? So article will mention whether the common seal is required or not. Now, do you take common seal for your customers when you're taking signatures? Dennis, what is your approach? What is your bank approach? Do you take this embossed seal or the common seal of the companies when you're taking signatures? Dennis? Sean?
Yes, we get the emboss seal in each document and in each page.
each page, right? Okay, so you request the customer to place the common seal, and either two directors or director and secretary will sign. Okay. Kaushalya, what is your view? What is your experience? Kaushalya? Kaushalya?
Excuse me, sir.
Yeah.
What's the difference between the embossed seal and the normal seal?
Rubber stamp.
Rubber stamp, yeah.
Yeah, embossed seal is the common seal, which is impressed one, where you get a steel instrument, and once you press it only, you get the seal. Rubber stamp is the normally it's a normal stamp. So these are two documents. If you want to show, if you want to place this common seal, definitely the common seal should be witnessed by two directors or director and secretary, or in line with your articles. But this rubber stamp, it's just an indication to show that you are your company name and the registration number and the address. So these are two different documents. It's rubber stamp is just a rubber stamp. Or any business, even a sole proprietorship can have the rubber stamp. When you're acknowledging a document, you place the rubber stamp. Common seal is mainly meant for the documentation part. If the company is entering into a contract on behalf of the company, it should be under seal. We say under seal. So the seal is the signature. Two directors will witness that. Okay, right? Any other questions? Now, yes, what is your approach, Kaushalya? How do you take these company signatures? Kaushalya? Chaturanga? Anything that you can add? Bankers should not keep silent, right? It's important for the bankers to talk. Prasanna? Prasanna, can you add something?
From the Company Act 2007, it has not said it is not necessary to place the common seal. But the thing is, it's also said the previous articles could be used as after new registration under this 2007. The problem is in the articles they said they will because these most of companies are registered in previous act. That article says common seal should be confirmed by two directors or something. So it is difficult. Some said it is removed from the this act.
Okay, so point taken. That's the answer that I actually wanted. Now there are two types of companies which are formed prior to 2007 and which are formed after 2007. So prior to 2007 companies, definitely they will have this common seal witnessed by two directors or director and secretary. But subsequently, after this new Companies Act came, if they have changed their articles, there can be a variation on that. So there is an understanding among the bankers. This understanding is among the bankers only. New Companies Act says there is no requirement. No, there is no such statement there in the New Companies Act, right? You can, if you want, you can have it. If you don't want, you can't. You can complete your transaction without the common seals. So the point is where, unfortunately, the bankers think you don't have to have. There are companies who are using common seal which are formed after 2007. So the best thing what you have to do is you have to check the articles of that particular company, whether it's an old company or a new company, and just see whether there is a clause section for sealing. If there is a clause for that sealing, definitely you have to get the signatures in line with that particular clause. If the articles are silent, the article is silent with regard to the common seal of that particular company, then you can have a separate approach. But if the article is there, or there is a section to say that even for a new company that you have to place the common seal in front of two directors and director and secretary, definitely you have to get that instrument in line with that requirement. Otherwise, you are in trouble, right? And if the company says, okay, there is no provisions, or then the articles is also silent, and the directors or the company say, no, under the New Companies Act, there is no requirement, therefore we are not taking. Let the directors pass a resolution to that effect to say, since our company is formed under the New Companies Act 7 of 2007, in line with the provisions of the Companies Act, we are not using a common seal. So then you have some kind of evidence, or you have some kind of a document with you to as a confirmation from that company that passed by the board of directors to say that they are not using a common seal. So without that document, I'm not recommending for any company, any banker to avoid this requirement of a company seal, requirement of obtaining the common seal for any documentation. So there are a lot of misunderstanding among the bankers to say, okay, now this Companies Act, you don't want this document. Since this is not there, it's not mandatory. No, there is no such clause in the Companies Act. You have to check the article. Whether it's old or new, you have to check the updated article and see whether there is any provision. If the provision is there, definitely you have to get the common seal. Because the law is open. Law has stated that it's not mandatory. It's not mandatory doesn't mean that you don't have to have. If you want, you can have. Right? So please check the articles, and before you get the signatures, you have to get the common seal. If it says that you have to get the common seal, the simple reason, common seal is the signature of the company. If you have taken the director's signature without the common seal, that means that document is not valid. So be careful. Any questions?
If the old companies have registered under New Companies Act, it is also still required.
Yeah, so the old companies now, the re-registration is a separate requirement, and changing the article is a separate requirement. Now our bank, Sampath Bank, is started in 1987. So our company is registered under the previous Companies Act. We have our articles, but we have not changed our articles. Still the same set of articles are used today. So our old article says there is a requirement of common seal, which still we are using it. So there are two things. Re-register. If we fail to re-register, we can't today run the business. So re-registration is a separate requirement. Changing the article is a separate requirement. In ours, we changed the we re-registered, but we didn't change the articles. But if you take HNB, they re-registered and they change the articles. So these are two different requirements. So be careful. Along with the re-registration, automatically articles won't change, right? Yes. Right. Any other questions? No. Right. Seems to be there are a lot of practical issues. Now, how to measure the capacity of a company? Now, if you take an individual, you have to have capacity. In case of a partnership, you have to have capacity. Without capacity, you can't run a business. Now, how to check the capacity of a company? How do you know whether the capacity is there? What is the document that you can see whether the capacity is there? What do you mean by capacity? Legal capacity? Can a minor enter into a contract?
No, only for necessary contracts are necessary.
Yeah, what are the necessaries or necessities? What do you mean by necessities? What are the necessities, so-called necessities that we are today talking? Food, okay.
Food,
Okay. What else? Only food.
The needs, like
What are the needs? Yes, and can someone add? Food is right. Food, shelter, clothing, education. These are the four main necessities of an individual. Now, for an example, we'll assume that we'll take you as an example, Udesha. We say that your father is having a lot of money. Okay, he's one of the richest person in this country. He's the number 2. Now, for you to have, we'll assume that you are a minor. Okay, for you to have a BMW car for your transportation, is it a necessity or not?
no,
No,
not a necessity.
not a necessity. Okay, any different answers? Any different answers? Okay, I will take another example. This will be much more clear for you all. We'll assume that our Prime Minister's younger son is a minor, right? Current Prime Minister's younger son is a minor. For him to travel, BMW car is a necessity or not? Yes? Yes, Udesha?
It actually depends.
Yeah, so, okay, the second scenario?
Accordingly, it's like it depends. Like one might need and one might not.
Yeah, so the
But
both examples are the same. No, your father is the second richest person in this country, and the second example, the Prime Minister's son. So
but
see,
then you
yeah,
can. It's actually according to the law. Like if you, it's like you have to have that for your living. That is what comes to necessity.
no,
Like
no, it goes with your family background and wealth as well. Now we
oh,
can't expect the Prime Minister's son to use the public transport. We can't expect you to use the public transport, and definitely your father will not allow that to, because due to security reasons. So it depends on the background, wealth of that particular individual as well. If so, for those type of people, it's a necessity. Having a car is nothing, right? But at the same time, for a normal person, having a car may be a luxurious item. But in today's context, under these current conditions, having a car is can one can argue it's a common basic requirement, because you can't go in the public transport, right? So there is no standard with regard to these necessities. It depends on the person and his requirement. This food, shelter, clothing, and education are the basic requirements. So similarly, other than these necessities, if a minor is entering into a contract, he is not liable. Right? Can a minor become a partner of a partnership? Can a minor become a partner of a partnership? Yes? Shan, can a minor become a partner of a partnership?
No, sir.
No. Taranga? Taranga?
No, sir.
No. Right. Supun? Supun?
No, sir.
No. Amir? Amir?
No, sir.
No, he can be a partner. Partner can be a minor. Minor can become a partner of a partnership. Now, especially in case of family-owned businesses, father, mother, and son. Son is just 17 years or 16 years. They want to teach this business model to the son. They get this minor into the partnership. But only thing, if you are dealing with that particular partnership, you have to understand that partner is not liable. Minor is not liable for the debts of the firm. So you are taking an additional burden and an additional risk. You can't take action against him, because this is something to do with business, nothing to do with his necessities. So if you are dealing with a partnership where there are minors, right, then you have to be careful because you can't take action against them. But from the partnership law allows a minor to become a partner of a partnership. There's no restriction. But when you come to business decisions, they can take business decisions, but the other party can't take action against them because they are not legal. They don't have the required legal capacity to enter into the contract. Okay. So there are some principles. You have to be a little bit careful on that. So how to measure the capacity of a company? Articles will provide you. Once you form a company, you are registered, articles will provide you the required capacity. So you have to see whether the company is entering into a contract in line with the required available capacity in that article, set of articles. Right? That's important. Okay, then, right. I will continue with this particular slide. Now the time is 3:20. Be back by 3:40. 20 minutes break. And please bring your questions, whatever the questions that you all have, because those are important. My intention is not to complete the set of slides. My intention is to discuss your problems. So raise your concerns. I'm happy that Sampath is raising a lot of questions. That's good. We'll try to find some solutions for your problems. Okay, then return back in 20 minutes. That's 3:40. Thank you. Hello. Are you all back?
Yes, sir.
Okay. Are there any questions? Right. So the company as a separate legal person means that company and its owners are separate. So if you want to take action against a company, you can take action. If you want to purchase a property in the name of the company, you can do. But in case of partnership, you can't purchase a property in the name of the partnership, or you can't take action against a company because the partnership name is not a legal person, whereas a company is considered as a legal person. So that's the difference between a company and a partnership. So characteristics of the company is an artificially created legal person. You can sue or be sued. That means the company can sue another person, a legal person, or company can be sued. You can sue or can be sued, right? So in such an instances that and also death of a shareholder, company will continue. Company, there is no impact for the company. Even 10 shareholders death, nothing will happen. But in case of a death of a partner in a partnership, the partnership will come to an end. So that's important. Now, if you form a partnership, and if ABC, if A is dead, the ABC partnership will come to an end. There is no existence of ABC partnership. Then what happens? If a new partner is going to come, then it will be a new partnership. Yes, any questions? Now, in case of a death of a partner of a partnership, what are your action? What type of an action you are going to do? If you hear ABCD are partners, ABCD enterprises, A is no more there. We are the banker. Now, what is the first action that you have to do as a banker? Prasanna? Prasanna?
It's depend on the liability which it has. If the debt partner has give his property or something, then we should immediately hold the transaction of the account. Otherwise, Clayton rules will activated. Then the liability of will be removing their own. So good thing is hold the stop the account at that time, and give others to finalize the transaction to end up the business.
Yeah, so your point is right. So in case if you hear a death of a partner, immediately you have to hold or seize the account. You can't proceed with that particular account. You have to hold or seize. And the reason is where, irrespective whether the dead partner has given a property or not, you have to seize the account. There is a principle called Clayton rule. Under the Clayton rule, if you allow that particular partnership to continue, the liabilities of the dead party will get reduced. That is why we say immediately you have to seize the account, right? Now, once you seize the account, if you get a check which was issued prior to that particular partner's death, what are you going to do? Prasanna? Now, ABC partnership, A died on 1st of May today. The check was issued last Thursday. That's on the 29th. Tomorrow you are going to get in this check. What are you going to do? Are you going to pay or not?
Should not pay.
Should not pay.
Yeah, it should be returned.
What is the remark?
Remarks.
Yes. Yeah. So the point is where now there's a bit confusion. What you are going to do? Sorry. Yes, Mandara.
Pending drawers confirmation.
Pending drawers confirmation. Right. Okay. Okay. You can return or either you can pay if you can get the consent from the other two partners.
Yes. Yes.
If you can get the written consent from the rest of the two partners, A and B,
then it's okay.
Or sorry, B and C, you can pay. And because it's a business transaction which took place prior to the death. So at that time, the partnership was there. ABC partnership was there. So then subsequently only the A's death took place. So you can pay if you can't get the confirmation or the written confirmation from the rest of the two partners, you can return the check to say pending drawers confirmation. Okay. Right. Good. Now, these are the types of companies that we see under the Companies Act. You get limited companies, unlimited companies, offshore companies, overseas companies. Out of the limited companies, you get public and private, and you get limited by shares, limited by guarantee, right? So public, it can be public listed companies as well. So basically, unlimited means your liability is not limited. It's almost like a partnership. So though there are provisions under the Companies Act, Sri Lankan Companies Act, for you to form an unlimited company, I can't see a reason for you to form an unlimited liability company. You wanted a company, concept of company to limit your liability. So if your intention is that, why you want to limit your liability? Okay. Offshore is where you incorporate in one country and you are doing business in another country. Those companies which are registered under the Sri Lankan law as an offshore company can't do business in Sri Lanka, but they can do business in any other country. Any company, any offshore company registered in India cannot do business in India, but they can do business in any other country. So the difference is where in case of offshore, you can't do business on the country that they have registered, but any other country you can do. Overseas means where they have, if a company is registered here, they are doing business here as well as other countries. Now, if you take HSBC is an overseas company, their registration is Hong Kong, but they have branches in Hong Kong as well as entire world. So it's a overseas company for us. Now, limited liability company, you get three types of limited: private, public. Public can be listed, unlisted. Private means it can be just family-owned type of a business. Husband and wife are directors, or it can be just husband, single shareholder company. It's small businesses, right? Public is where if I issue shares to all of you, it's a public company. I have taken outsiders' money. Public listed means companies which are listed in the stock exchange. So in Sri Lankan context, we have 300 odd companies listed in the Colombo Stock Exchange. Those are listed entities where they have taken public money. So all your companies, if the name ended with PLC, that means you have borrowed from the public. So limited by shares means your investment, your liability is limited to the amount that you have invested in that particular company. So if you have X Bank 1,000 shares into 100, that's 100,000. And if that company goes on bankruptcy, you're going to lose that money. That's it. Insolvent bankruptcy, right? Limited by guarantee means those companies, in addition to the shareholding, the directors or the shareholders have given a guarantee. Now, for an example, I'm a shareholder of X company, and me and my spouse are two shareholders of AB Private Limited. So I have one share, she has one share. So shareholding is 50-50. So if something happens to the company, we will lose the money what we have invested in the shares. Now, in that case, we will give a guarantee to bring a comfort for the creditors. Don't worry, if something goes wrong, I'm going to give 100 million. My spouse will say, okay, she's going to give 50 million. So in case if the company can't pay, I have to pay up to 100 million. My spouse will have to pay 50 million. So there is a personal guarantee given by both of us for our creditors to protect their interest. Those are called guaranteed companies. Any questions? So what we lend for this all types of companies as bankers, as financial institutions, we have this private, public quoted. Public quoted means listed. Public unquoted. We have guaranteed company. We have offshore companies. We have overseas companies. All these companies are there, but anyone wants, if any company wants, they can form an unlimited liability company as well. Any questions?
Sir?
Yeah.
Limited by share, that's the type of company, same type, no? There's no difference between them.
Sorry?
The limited by share category.
Yeah.
So there's no the characteristics is the same as other companies, right? Limited by share means that their liability is similar to share, right?
Yeah, so the limited liability, limited by share companies, what you're trying to say is whether they are private, public or listed, their liability is the liability will be the same amount what you have invested. 100% agreed. But the point is where now, I'm having a single shareholder company. I'm the shareholder, I'm the director, I'm the managing director, I'm the CEO, I'm the PN, everything is done by me. Now, in case if I want to borrow from your bank, and if tomorrow if I'm going to come to your bank, I'm going to say that I don't have any assets in my company. Right? I don't have assets, only I have pumped, we'll say 1 million. That's in cash form. So no assets. Now, if I'm going to request you to give me 1 million, will you give me a 1 million for my company? Yes? Sampath, will you give me 1 million for my company? My company doesn't have any assets. Will you give me 1 million?
You mean you are requesting a loan, right?
Yeah, I want a loan. My company doesn't have assets, right? I'm requesting you to give me 1 million for my company. Will you give me a loan?
So as we keeping one to assets as security, we can give.
Yeah, security I can't give, but I will say, okay, if you want, I can give a personal guarantee. Director's
Yeah.
personal guarantee.
Yeah, we can.
Yeah, so if I'm going to sign as a guarantor for my company's liability, then what happens to my liability? Is it limited or unlimited?
Yeah, it becomes unlimited.
Unlimited, right? So the point is where if the directors have signed as a guarantor for a facility of that particular company, their concept of their limited liability will no more there. They will be liable for the amount that they have signed as a guarantor. So if I have not signed as a guarantor, then my liability will be limited to the amount that I have invested. That's 1 million. But if I sign for a guarantee bond for my company, we'll say I wanted 10 million. You said, okay, you will give me 10 million, but my personal guarantee. So in case if my company can't pay, then I have a liability of 10 million. Plus, I will lose my 1 million, but I have invested in the company as well. Okay. So in such an instances, the concept of limited liability will not be there. It goes beyond that. Got the point, Sampath?
Oh, okay, thank you.
Okay. Any other questions? It's a little bit surprised to
Sir,
see
can
that
you describe limited by shares?
limited by shares is the normal company. All companies where if the company has issued shares, if you have purchased shares in that particular company, your liability will be limited by the amount that you have invested in that particular company. So if you have invested 100,000, if the company goes on insolvent liquidation, you will lose 100,000. That is, your liability is limited to the amount that you have invested in that particular company. That is why we say limited by shares. Okay. Any questions? Right. So types of company name should end. Every listed company PLC, every other limited LTD or limited, private company PVT or private, right? So based on the final 3 letters or the word, you can realize what type of a company is. Private means a single shareholder or few shareholders. Public means if I have issued share to all of you, you're a public entity. If the company is listed in the stock exchange, it becomes a PLC company, right? I have explained this particular point. All these points I have explained, right? Now, in case of a private companies can't issue shares to the public. There is a restriction, where is a clear restriction from the articles itself, sorry, from the company law, that you can't issue shares to the public, right? But in case of public companies and public listed companies, they can issue shares to the public, but there are restrictions from their articles, or there can be restrictions from their company law as well. Now, limit the number for private companies. The maximum shareholders that you can have is 50, minimum 2. But there are single shareholder companies where there will be only one person. Most of these single shareholder companies an extension of the sole proprietorship, right? Initially, when this concept came to the parliament, JP proposed to form single shareholder companies in Sri Lankan to the Sri Lankan law as well. It's an extension of the sole proprietorship. But the concern is where they wanted to limit their liability, individual running a business with limited liability. But my earlier example, if I have signed as a guarantor for the facility, definitely my liability will not be limited. But this is a common model which is used in today's context. A lot of businesses are forming this limited liability company model, single shareholder limited liability company. It's a common type of a business entity in Sri Lankan context. There are positive things as well as negatives in this company formation of company. So my personal advice, if you want to start a business, don't straight away go and start a private company. You start as a sole proprietor, then just study the business pattern. And if you feel that this is going to work, because we enter into a new field without knowing whether it will work or not. So such an instance, better to start as a sole proprietorship. If the thing gets established, thereafter you move for a private company or a limited liability company. It's not advisable to start straight away as a limited liability company, but if you have any reasons for that, fine. Because once you form a limited liability company, there are a lot of liabilities, but there are a lot of things that you have to do. Finally, you will end up with a lot of work and the cost. So if you don't have a proper turnover from that company, spending a lot of money for this day-to-day expenses will create a huge issue. Your turnover, your money, but the income what you are getting is less than your expenses over maintaining this company. So that is the main reason that I always say not to form a company immediately. But if you have a reason, okay, why you want to form a company, that's not a problem, right? Offshore company. So just go through these slides. I have given definition for each and every company. These are the documents need to open an account. Articles of association. Articles will give in and out of the company. Now earlier there was two parts, memorandum and articles of association. With the new Companies Act, the memorandum part was taken out. Now you have only the articles of association. The main reason why the memorandum part was taken out, in the memorandum part you get the objects of the company. Objects. Why you have purpose of forming this company. Those are the objects. But now for an example, under the previous Companies Act, if you have formed the company to do imports, you can't do exports, right? So if you start forming, if you have formed the company for imports, you can't do exports. If you want to do exports, you have to go to the shareholders and get their consent. Now under the new Companies Act, once you form a company, if you don't want special license for you to continue, you can do any business. If I start a business company today, I can do imports, exports, transportation, anything. But if I want to start an educational institution, I have to get the permission from the regulatory authority. But if you want to form a bank, I have to get the approval from central bank. So unless those such instances, today you can do any business. Once again, the whole idea of that is to remove this objective clause was to bring flexibility for the business world. You can do anything what you want within the legal framework rather than putting a lot of restrictions. So this memorandum part is no more there. Now, do you all take this intravenous certificate? Intravenous certificate, what is intravenous certificate? Sampath, any idea about intravenous certificate? Those who are doing credit, what is intravenous certificate? Or credit or anything? If you are dealing with companies, if you are giving corporate services. Supun, I think you are into the corporate banking, into marketing.
I'm into customer service actually, sir.
Yeah, what type of customer service? That is for the corporates or for the retail part?
It is actually a retail credit cards actually.
A credit card, okay. Right. Okay. Any questions? No? Right. Now this intravenous certificate, anyone knows about intravenous? Now when the old article or previous law, there was a document we take from the customers. It's called the intravenous certificate. Intravenous means there are two concepts, intravenous and ultravenous. Intravenous means you are acting within the given authority of the articles. That is intra, within. Ultra means you have gone beyond that, right? So when the memorandum when the objectives were there, the bankers were used to take this intravirus certificate, getting a confirmation that they have not exceeded their authority. But when the new when the new articles came, when the new Companies Act came, bankers stopped taking this intravirus certificate. The simple argument, but they say that now the objects are not there. But the object or the memorandum is no more there. Still, if you want, you can include objects in your articles. Only that particular document is no more there. But if you want, you can include this objects in your articles as well. So rather than coming to an assumption to say because this new Companies Act, you don't get the memorandum, it's better if you go through the articles and see whether there are any objects. If so, get the intravirus certificate from the directors. It's a personal type of a document. Personally, directors will give, confirming that they have not exceeded their authority given by the articles. Right? So it's better you take this intravirus certificate from your companies to get a confirmation that they have not exceeded their authority. So what I know is banks, financial institutions, they are not worried about that. What they say is no, it's not required. So a lot of deviations are there with this Companies Act, which are a little bit dangerous. And also the passing of knowledge is also another concern. There's no proper flow. Sometimes today you don't have time to educate the younger generation. So then what happens, they somehow get told of whatever the information that they get, or without referring to the seniors, and sometimes they do only a 50% or 25%. So it will impact finally to the organization. So you'll have to be a little bit careful on that aspect.
So excuse me. Okay.
Yeah. Yes.
Okay, sir.
Right. So you need to have the articles of association, registration of application, form number 1, certificate of incorporation, form number 2A, list of directors, that's a form number 20, registered address, form number 13. So any company, if you want to open an account, you have to have the copy of the articles, form number 1, based on the type of the company, certificate of incorporation, list of directors, registered address. These are mandatory. Now, depending on the type of the company, you have different registration forms. These are the different registration forms that you have for different companies. If it is a private, 2A, unlimited 2B, limited companies 2C, public listed 2C, company limited by guarantee 2D, offshore 2E. Yeah. So if you are opening an account for a limited company, instead of these are the documents required for that. In any change of directors, you have to update the form 20. In change of registered address, you have to file a fresh form number 30. So all the documents which you have to take in case of a company, I have given here. Just for your information, I'm not going to go in one by one. Just you can go through that and get an idea. Okay. So other forms, if you want to create a charge, previously it was form number 13. What do you mean by creating a charge? What do you mean by creating a charge? Yes, can someone tell me, those who are doing credit? What is creating a charge? Yes, Bandara, what do you mean by creating a charge?
No idea, sir.
No idea. Udesha?
No idea, sir.
Taranga?
Actually, sir, no idea.
Amir?
No idea, sir.
Okay. Subhashana? Subhashana is silent. Take a serious decision not to talk. Shan, what about you?
No idea, sir.
Sandhya? Sandhya?
No idea, sir.
Sampath?
So I think when we take a loan, we have to take a charge, make a charge. When the companies taking loan, then we have to register with the register of company.
Yes, if you are giving a facility against the company asset. Now, for an example, I have a company, I have a vehicle in the name of the company. You are keeping that my vehicle as a mortgage and you are giving me a facility. In such an instances, if I'm giving a company asset, not my personal asset, company asset, you have to lodge that claim, you have to lodge that transaction in the register of companies. So if you have lodged that claim in the register of companies, right, by filing a form number 10, you will be considered as a secured creditor. So there are creditors secured and unsecured. Now, for an example, my company will say, I will have certain assets as well as I will have certain liabilities. When my company is going on liquidation, I will have to sell my assets. Carefully listen to me. My company is going on liquidation. I will have assets. At the point of liquidation, I have to sell all my assets and settle liabilities. So if I have 10 million assets and 10 million liabilities, no problem. I can pay everything, which include the shareholders' money as well. If I have 5 million assets and if my liabilities are 10 million, then I can't pay all the creditors. There is a percentage of creditors who will not get 5 million. So in such an instances, we have to prioritize all our liabilities. So this is called ranking of liabilities. So the first ranking will go for the unpaid salaries of the employees, salaries, EPF, ETF. The second priority goes to government taxes. Then the third priority goes for the secured creditors who have created charge at the register of companies. And the fourth category will be unsecured creditors. So if you have lodged your charge by using the form number 10, you will be considered as a secured creditor, which is the third ranking in this order. But if you fail to create the charge within 21 working days, you will be considered as the fourth party, unsecured creditors. Once the secured creditors are paid, only you will get the money. So why you want to be a secured creditor? To get priority over unsecured creditors or the third ranking. If you register as a secured creditor, you'll get the third ranking. If you fail to register as secured creditor, you'll get the fourth ranking. So that is why, in case if you are granting a facility to a company against the company asset, you have to create the charge at the register of companies or file form number 10 at the register of companies within 21 working days. Within 21 working days. So in case of corporate, now if you're keeping a fixed deposit of a company, right? If I have a fixed deposit, you are keeping that as a security and giving a loan facility to my company. Now, what happens there? Supun, your mic is unmuted. Yeah, now what happens? You're keeping my company deposit and giving my company a facility. Do you have to create the charge? Yes, Kaushalya? Kaushalya Kumari? Yes, Kaushalya? Pushpa Kumara? You have to create a charge. If you're holding a company as you don't have to do lending, right? Sometimes I have seen there are companies when they want money, they will say, okay, I keep this fixed deposit and give me a loan. Give us a loan. So in such an instances, if you are creating a charge in the sense if you are keeping the company asset, even if fixed deposit, you have to create the charge. Now it can be the credit card side. Supun's department is giving a corporate facility for their clients' credit cards, corporate cards, against the company deposit, against the company fixed deposit. In such an instance, definitely you have to create the charge at the register of companies. So I don't know whether these things are happening, right? It's a common sense, very simple requirement. If you're holding a company asset and giving a facility to the company, okay, you have to create the charge at the register of companies. So it can be credit card, it can be a normal day-to-day banking branch, or it can be the credit department. Right.
Excuse me, sir.
Yeah.
So, one question. If
Yes.
we lend against a liquidate asset like a fixed deposit, should we have to obtain a charge?
Yes. If it is a company-owned asset, if it is a company-owned deposit, and along you have to register this set off, corporate set off, and create a charge. It's a must. Because finally what happens, what's the advantage of creating a charge is where at the time of liquidation, then everyone knows what are the charges that's created against that particular company. So all the charges will be registered. Once it's registered, it's a public information. So if you have more adequate assets, no problem. But if you have limited assets of that company, if you have not secured the secured charge, so secured position will be considered as unsecured. Sometimes you won't be able to get a single cent. So answering your question, yes, if you hold a fixed deposit of a company and giving a facility, you have to create a charge. Not only a fixed deposit, even a savings build-up is the same. I know practical difficulties are there to create a charge against the savings build-up, but any asset, right? So what you can do in case of savings build-up, gradually every year you can create a charge over the build-up what you have collected for that particular year, and register at the register of companies. In case if the company goes on liquidation, you will get priority and you will be able to use that money to secure your loan. So the bankers' practice is different. What they do, if something goes wrong, straight away you uplift the FD and you recover your outstanding, which is against the law, which you can't do, but that's what normally happens. Right. Any questions?
So in the case if we uplifted and we settle our credit, anybody can go to the courts and they can argue against the bank?
Yeah, other creditors can argue. They will try to show you whether you are a secured creditor or unsecured creditor. So if you have created the charge, you have a edge over that. You can say, no, we have created the charge, we are a secured creditor. But if you fall under unsecured creditors and if there is no money to pay the secured creditors, then what is the situation? Right? They can cancel your transaction and they can request you to put that money into the liquidation process to pay for the secured creditors. So that is possible. It has not happened. Maybe either customers don't know about that or they don't want to. Since it's a hassle now, if we're going to object and if we're going to say that this bank has done this, sometimes it's not easy for you to prove. So in such an instances, sometimes it will you straight away you settle it and you keep quiet. And sometimes the legal layers, they also don't know whether there was a deposit under this particular account or individual. So they can take you to courts and reverse your transaction as well. Right. Any other questions? Right. So re-registration of the company requirement came at that time. All existing companies, they want to re-register and ensure that all living companies will continue. And they wanted to close to all other companies. A huge number of companies were closed because they realized there are companies without a reason, so they wanted to close. And as a result, they gave a time date to complete. And any company which are not re-registered, by now you can't have any company which are not re-registered. So if there is a company today which are not re-registered, be careful. That company can't exist. Under the law, the register of companies can close down, erase the name from the books, and if there are any assets, they can acquire the assets as well. So be careful. If you don't have this form number 41 or the re-registration certificate, you need to be a little bit careful on that aspect, because the register of companies can seize you of that particular company and acquire all the assets. But the beauty of this section is where they're talking about acquiring the assets, but they're not talking about acquiring the liabilities. So the lenders, creditors who have given the loans will have to bear the loss. Memorandum, I explained you what is a charge, fixed or a floating. Now, fixed is where if you are creating a charge over a fixed asset. What are the fixed assets of a company? Can you tell me one or two examples of fixed assets of a company? Yes. What are fixed assets? Yes. What are fixed assets? Land and building. Those are fixed assets. Things fixed to the land.
Property.
Property, land, building. Right? Floating is anything that you can move. Now, if you are creating a charge over a fixed asset, that we consider it as a fixed asset, fixed charge. Floating means something revolving. Now, for an example, if you're one of your customers have a work in progress. What is work in progress? Where they convert this raw material into finished goods. So there will be raw material will come to this to the manufacturing process. Semi-finished good, finished goods will move out. So any given time, all these three components are assets of that particular company. Raw materials, semi-finished goods, finished goods. So if that has a cycle, work in progress is there, continuous cycle. So if you are creating a charge for a work in progress where there is a cycle, we consider that as a floating charge. Fixed means if you are creating a charge for a fixed asset. Or if you are creating a charge for an example, if you are creating a charge for one particular laptop, it's a fixed charge. Not only for the fixed assets, if you are creating a charge for a fixed asset, it's a fixed charge. But if you are creating a charge over a laptop import and local distribution business, you import, you distribute, you import, you distribute. It's a circle. So in such an instance, you will be creating a floating charge. There is a float. Float is changing, revolving. So in such an instance, you create the floating charge. So a fixed charge cannot convert into floating. A floating charge cannot convert into fixed. Who may sign? I told you, companies under common sale with 2 directors or director and secretary, or if the article permits to authorize a person, he has to sign without the common sale. And it's important for the parties to check who is authorized to sign on behalf of the company. That's an important requirement. Right. Method of typing, AB Private Limited, a company duly incorporated under Companies Act 17 of 82 and registered under 7 of 2007 of Sri Lanka, bearing registration number PQ123 or whatever, and having its registered office at this address. So you are indicating three components: name, registration number, and the address. So the registration number is important. It's an important requirement for any company. Even if you are printing a envelope for your company, you have to have this registration number. It's a mandatory requirement. If you are preparing a rubber stamp for the company, you have to have this registration number. So be careful. Even if the registration, if you are publishing a death notice on behalf of the company, you have to have this registration number. If you fail to include this registration number, register of companies can take action against your company or that particular company. Be careful on those small points, but it will make a huge impact over the company. So the company name and the number, as I told you, those are mandatory information. If there's any change, sorry, you have to inform. You have to, in order to change the name of the company, you have to follow the procedure applicable in the Articles of Association. So I'm not going to go in detail, just go through. Common seal, I told you, it's not, there is no compulsion, but you have to check the articles and say whether the requirement of common seal is there or not. If the articles are silent, as I told you, better you get a confirmation or board resolution from the company to say under the current Articles of Association, which is formed under the 7 of 2007, the company has decided to waive off this common seal and they are not using it. Instead of that, they have authorized so and so to sign the documents. So once again, if the company has issued that, you have confirmation to say that the company has issued, no problem, you can continue that transaction. Ultravirus, I told you what's the meaning and how it happens in practice. Any questions? Unfortunately, I don't get any questions, only a few questions. Why? These are new topics for you all. Is that the case? But you all are dealing with companies. It can't be new for you all. Either you all are not following these principles, either you don't know to follow whether these are required to follow. But be careful. Through a company, you can do anything. Companies are the most dangerous entities, business entities, what I say. So one night they can close down and they can vanish. There is no personal liability. And there won't be any problem for them. Right. Alison, any question?
No, sir.
Right. Now this solvency test is also important. Now, if you are dealing with a company and if that company is going to pay dividend, that particular company must meet the solvency test requirement. What it says, solvency means value of the company assets is greater than the value of its liabilities and company state capital. So after you pay the dividend, if your total assets are less than the liabilities and the stated capital is the amount of money what you get after issuing shares to the public. If I have sold 10 million shares into 10 rupees, my public contribution will be 100 million. So that is my stated capital. Number of shares relevant for that stated capital will be 10 million. Right? So that's how it goes. Stated capital is the amount that the public has given to your company. So in case if the company is going to pay dividend and if they can't meet this solvency test requirement, that company simply can't pay dividend. So they even the directors will be personally liable for paying dividend when it's in an insolvency situation. So be careful. Sometimes the companies might say, okay, we paid a dividend last year, this amount, we are doing well. And just ask the question whether you did your solvency. Can we see a copy of the solvency? So if you have not done the solvency, then it's going to be a problem. And if they have done a solvency and they have not met the requirement, which is stated here, total assets should be more than total liabilities and the stated shareholders' money, then once again, it's going to be a problem. So be careful. Sometimes the companies, they want to show that they are doing well and they have paid a dividend. So indication of paying dividend without fulfilling the requirement is dangerous. You have to be very careful. And also when you are giving, what are subsidiaries? What are subsidiary companies? Alison, do you all have subsidiaries in your company? In DB?
Yes.
Yeah. How are you going to define the term subsidiary? What do you mean by subsidiary companies? Yes? Any idea? What is the subsidiary? If the parent company is holding more than 50% of the shares of the second company, we consider the second company as a subsidiary. So if the parent company is holding more than 50% shares of the second company is considered as a subsidiary. So anything above 51, if the parent company is holding 100%, we say wholly owned subsidiaries, 100% owned subsidiaries. So the danger is where if you are lending to a 100% owned subsidiary, right? If you are lending to a company where subsidiaries or the parent company holds 100%, in case if the parent company decides, they can close down the subsidiary without informing to any other party. What they have to do is they have to just pass a resolution and close down the business. So in such an instances, you are in trouble because you have given a facility to a subsidiary company. So always, if you are giving a facility to a subsidiary company, make sure that you get a corporate guarantee of the parent. What is a corporate guarantee? What do you mean by a corporate guarantee? Yes? What is a corporate guarantee? Sampath? What is a corporate guarantee?
Yeah, companies from the company will contact that to in case of subsidy unable to pay the state, parent company will pay state.
So corporate guarantee means the parent company gives a guarantee to say if something goes wrong, don't worry, we are going to pay, right? So it's good to have a corporate guarantee when you are lending for 100% owned subsidiaries. As I told you, they can close down the business without informing. So that is a dangerous thing. Everyone must be very careful on that aspect, because sometimes you will, without your knowledge, parent company will pass a resolution and close down the business, which is a risky type of transaction. So as I told you, you can do a lot of things by using this company and company structures. Yeah.
In case of subsidiary, that board of the subsidiary are the same in the parent company?
Sir,
No,
what's
it's
the
not.
meaning of sister company?
Sister company, parent, that's a parent company. Sister company means it can be now, for an example, A is the parent, A is holding 51% of X company, A is holding another 51% of Y company, and X and Y are sister companies. Normally we don't use this, those are just informal type of terms. We say subsidiary. So sister means they are in the same category. Parent is there, two sisters are there. So we consider, rather than saying brother companies, we say sister. So I don't know why we are using the term sister, but they are in the same. There is where there is a common parent, can consider the second layer as sister companies. Sorry, what's your question, Sampath? I missed that point. You raised a question.
In case of subsidiaries, the growth of the subsidiary is the same as in the parent company, or can be different?
It can be different as well. Now, for an example, the whole idea of forming a subsidiary, if the parent, now for an example, banks can't do everything. Banks can do only the banking business, which are permitted by the Central Bank of Sri Lanka. Now you want to do leasing, banks can do leasing, but you want to expand this leasing. Right? So you form another company and you give this leasing arm for that particular arm. If you take the people leasing is a separate arm. Right? So if you want to run that business very effectively, you will take people who knows about leasing industry. So the bankers can't do leasing. Bankers can do leasing for their own customers, existing customers. But aggressively, bankers can't go for leasing, because the normal leasing business and the banking lease business are two different focus and two different types of segments. Normal leasing, right? It's a quick process. You go today morning. By the end of the day, you will have to get the vehicle with you. So it's a quick service. But that kind of a service is not given by the banks. So those are two different segments. So if you want to get the maximum out of your subsidiary, you can appoint a totally different group of people as directors for that company. At the same time, if you want, you can appoint few people from your board as well to keep a control over that particular company's transaction. So that's how it goes. It's not required 100% to be the same directors. It can be or not.
In such a case, it means that in subsidy, without the subsidiary resolution for passing a resolution to close down their business, can the parent pass a resolution to business without that?
Yes, the parent company will pass the resolution to close down the business of the subsidiary. So who is more strong, parent or subsidiary in certain structure? Are you in a place where you get this motor racing? Huh? Are you still in Nuvarelia?
No.
Right, okay. Sorry.
So in that case, so without that passing resolution by the subsidiary company, the parent is definitely strong. Without then they only can decide that whether to close out that subsidiary, right?
Yeah, so those are home and home companies, no, right? I can do, I'm a parent, I can do what I want with regard to my subsidiary. So sometimes if you are a subsidiary, I'm more stronger than you. I can decide, okay, whether you are going to continue or not. So I can inform you, pass a resolution and close down the business. Now, point is where if you have lent, if the bank has lent to that subsidiary, they will have problems. So if you see your offer letters, those who are doing lending, or if you have a standard offer letter for the companies, you will include all the clauses. If there's any change, you have to inform. If you are selling part of the company, you have to inform. There are so many restrictions and so many requirements. Okay. A lot of noises come from Sampath, your area. Is it an ice cream van or a bread van? Good to hear those sounds, right? Once again, back people are at home and facilities are coming up to you. Now be careful, especially these days, we don't know what's the real situation. I don't know whether the numbers declared by the public or the authorities are right or wrong. So you all have to have your own controls. I know as bankers, we are exposed, and now a lot of bankers are having this as well. So you need to take control. And recently I heard that there is a mask introduced by this, manufactured by this Peradini University, and it's available at Satosa and this State Trading. I think I have taken that. It's a good product. Where what it says is that you can wash for 25 times and use it. I don't know whether it's possible or not, but still, it's a local product. It has 3 layers. It's very durable. It looks very nice. And finally, now if you are using 25, we'll say 20 mask, and if you are putting it to the waste or throwing it to the environment, you are damaging the environment. But here you are using one face mask and throwing it, and it's a local product. So we have to, rather than sending money out, you help our local stuff to come into the market. So if possible, don't take this ladies one. It's very small. If you're taking it, take the gents one. It's average size. It's good, and seems to be very comfortable as well, right? So if you are using it, make sure that you buy. I don't know whether available or not. Sometimes Satosa say they got only 50, and within 15 minutes it went. So try to get hold of that. It's a good product. Right. Any other questions?
Sir, I have one concern. Now, say a bank has subsidiary companies, and a bank wants to lend to it. So then, does it conflict, or it's the same documents that they require?
It's the same document, but you can't give any favorable treatment. If you are giving it to a customer 10%, you can't give at 8% because they are subsidiaries. So no favorable treatment. It's a related party for your bank. The related party means you're holding a substantial interest over that. Any company who is holding more than 10% under the CBSL Act, it says a substantial percentage. So if the parent company is holding anything about 10%, it's a substantial interest. So such companies are considered as related parties. So for any related party, you can't give any preferential treatment. You can give a loan. It will be the same set of documents, but you can't give any preferential treatment, right? You can't give a facility without security. You have to get a security. But certain instances, you can't give your parent company corporate guarantee, right? Because you are guaranteeing your own subsidiary. You can't do, but the subsidiary must bring its own security asset. You can give, there is no restriction, but the only restriction, it has to be approved by the related party transaction committee before you grant that, since it's a related party transaction, and you can't give any favorable treatment. Okay. Any other questions? You must have a lot of questions. I was wondering 2 reasons. I was wondering why you joined for this session, get what type of knowledge, and when you are discussing corporate governance and company, you should have a lot of questions.
Sir, can you describe the share structure?
Share structure of a listed company.
Yes, initial shares, dividends, those things.
Yeah. Now, if I want to form a company, I will start as a private company. So with 1 share, I can form a company. No restriction. If I want 100, I can issue shares and I can purchase the shares. Now I want to expand this private company into a public company. So I'm issuing all of you, my entire class, shares. So since you are outside, it's a public company. After some time, once you prove, if we can meet the requirements of the Colombo Stock Exchange, we can go public. Public in the sense, in larger version. Selling shares to you is also public. If once I sell shares to you, my private company become public unlisted. When this public unlisted company goes to the public, listed as a listed entity in the Colombo Stock Exchange, it becomes a listed entity. So at that point, if I'm issuing shares to the public, we say IPO, initial public offer. First time I'm issuing shares to the public at large. But subsequently, any company who is a listed entity who is issuing shares to the public, those companies we consider, those issues we say it's a right issue. Initial first time going to the public is public issue, IPO, initial public offer. Secondary, if you are issuing shares to the existing shareholders, it's called a right issue. So earlier there was a concept of minimum value or par value. You keep a premium and you add something and issue. That's called the premium. Now today you don't have all those concepts. If you are pricing your share at 50 rupees and if you are selling it to the market, the share value of your company will be 50 rupees. No par value, no premium, nothing. Just straight away 50 rupees, you're selling 10 million into, and you are getting 500 million from the public. So dividend is the return that you get from, it's a return on investment. Now, if you have 1 billion, if you go and deposit in a bank, fixed deposit, we say you are getting 5% for a year, right? So you get 50 million at the end of the year. But if you go and purchase shares in a company by using this 1 billion, your return on investment is the dividend. So if the company is not going to pay a single cent as dividend, you're losing everything. If you have kept that money in a bank, you would have got 50 million. But if the company is not going to pay a dividend, a return on investment, you're losing everything. It's a waste of money, right? So that is why that company will have to pay a dividend, reasonable dividend for that shareholders. So if your dividend is, we'll say 7 rupees per share, then you are getting 7%. Under my calculation, you are getting 7%. You're upon the deal. Upon the deal means if you go and keep that in a deposit, you are getting only 5%. Whereas now you are getting 7 rupees. That's 7%. But the point is where there can be certain instances. Now, today the market rates are very low. So the expectations of the government or the predictions of the government is to keep this low rates for the next 5 years. I don't know whether it will happen. They might somehow try to control for the next 3 years their tenor, but after that we don't know what will happen, right? So it's a single digit concept is good, but you have to have a lot of opportunities in the market for you to invest. Today the single digit lending is there now, but no lending. So as a result, all the banks are excess liquidity. They have excess liquidity and they can't do anything with that. So when you have single digit lending rates, it's obvious deposit rates will also come. So continuously deposit rates might come down. If there's a COVID third attack, if it affects dangerously, and there'll be less lending and there'll be more recoveries. Less recoveries, more NPLs. So the banking sector will affect in a big way. So we have to be very careful in that aspect. That's why the sector should be very careful. Sector should not relax, right? Any customer, one individual's close of a business will impact your business as well, because we have lent for all the sectors. We have given facilities for all the sectors. All the sectors are dealing with us, starting from a minor savings to the senior citizens, as well as private company to a listed entity or a group, right? Clubs and societies, everyone is dealing with us. So any sector who affects out of this COVID directly impact our organizations as well. Right? So that's the whole idea. But when you see a listed entity, there are major shareholders as well as minority shareholders. Any top shareholders we consider as major shareholders who have a substantial interest, or any shareholder who is having more than 10%, we consider it as a substantial shareholding. So if you see and analyze any listed entity, top 20 shareholders, they hold 60 to 70% of that particular company, listed entities. The balance 30% is held by the rest of the shareholders, right? That's a normal mechanism. That's a average ratio in any company, any listed entity. Top 20 holds the majority, and the balance 30% will be held by the majority shareholders, but their controlling authority is less. So simple argument, top 20 control the company. Now top 20 controlling the company, is it good or bad? Alison? Top 20 shareholders controlling the company, is it good or bad?
I'm not sure.
Yes. Shan, what do you think?
I have no idea, sir. I think it's good.
Sampath?
In a way, it puts like decision taken is easy, but in case of transparency, there may be questions.
Dennis?
I think it's good, sir, because top 20 companies, they have the companies, they are ruling in their manner.
So is it good or bad?
Yeah, it's good.
Okay. Desha?
It's good, sir, so they can collectively get ideas and rule, like, to engage in the management and all.
Okay. So, right. So there are two thoughts on with regard to this. Some say it's bad, some say it's good. Now the people who say bad is bad, sometimes they think, okay, the top shareholders, they control the business and they take the money out. But it won't happen in all instances, because listed entities, you can't do that. If the major shareholders are getting a dividend, that the same dividend will be paid for the others as well. So my personal view, yes, it's good. The reason now, for an example, the top shareholders have pumped billions. If I buy shares, I will buy 100,000 maximum. Versus X companies 1 billion. What is more powerful? 1 billion or 100? What is more important is 1 billion, not my 100,000. So those companies have invested big money, and it's justifiable for them to control the business. But the point, when they are controlling, they have to control the best interest of the company. That's important. They have to control for the best interest of the company. If they don't do that, it's going to damage the company. So if you're giving your authority, if you're putting your shareholding, right, to add value for the company, and all the stakeholders are getting the benefit. So that's good. But if you are using your authority to get everything for you, I think that is not advisable. So from the size of the investment, top 20 companies involve more. It's good, because at least they will try to protect their investment. If they are trying to protect their investment, automatically others' investments will also get protected. Right. So this is the structure of company. Any questions, Sean? Is it clear? Or you wanted any further clarification on that?
Yes, sir. Thank you. Thank you very much for that.
Okay. Any other questions? No. So this financial institutions, they give financial assistance to buy its own shares. Now under the new Companies Act 7 of 2007, there are provisions for the companies to buy back its own shares. Buyback. We have sold shares to the public. When the public says we don't want, we can buy back. But in case of listed entities, you don't have to buy back, right? The person, if one individual says I don't want the shares, you can sell it in the market because you're a listed entity. No problem. You don't have to come back to the company and ask whether can we sell the shares. But in case of a private or unlisted companies, you can't do that. There is no market for you to trade, right? So then what happens? You will have to go back to the company and request the company to buy back those shares. In such an instance, if the company doesn't have money, adequate liquidity, whether a bank can give loan for the company to purchase. So if the intention is good of that particular company, why they are going to buy back the shares, provisions are there for the financial institutions to give a loan for that particular company to buy back shares. So once you buy back the shares, automatically that share will get cancelled. Right? It will make it zero. Now, for an example, I have issued 100 million. I'm going to buy back 10 million. As soon as I purchase that 10 million, the number of shares in my stated capital will be reduced for 90 million. 100 minus 10 is 90. That 10 million shares will get cancelled. I can't issue to someone else. So there are provisions in the Companies Act for financial assistance to buy back its own shares. Stated capital is the amount of money that you get after issuing shares to the public. So you can get capital by way of cash or capital by way of asset. Now, for an example, I want to start a business. I have a I have a building and I have 10 billion. So I'm going to give this 10 million and the building to the company, and I'm going to transfer it in the name of the company. We say altogether the value of the property is 40 million and the money what I'm going to give is 10 million, altogether 50 million. So the company will have to issue shares for my 50 million. So the company will say 50 million divided by, we'll say a 10 rupee share. So I'm getting 5 million shares from the company, partly cash, partly property, right? So the stated capital is the capital that a company is going to get after issuing shares. It can come as movables, that is cash, or it can come immovables as property. So if you say the stated capital, total money what you have received, or total value what you have received after issuing shares. So it can come cash plus any asset as well. So the reduction of stated capital is an input of buyback. If the company is purchasing its shares, early example, 10 million, 100 million, buyback 10, reducing your stated capital into 90. So automatically, along with the buyback shares, the value of the buyback share will reduce the original stated capital from the original stated capital, and the balance will be the new stated capital. So these you don't have to go in detail, but you should know because you are dealing with companies. When you're dealing with companies, since what I see, the bankers, their knowledge is very poor when you come to company law. But they are dealing with companies in a big way. They think that it's a prestige to have companies. It's a prestige, but be careful. Due to our lack of our knowledge, they can do a lot of things, which is dangerous. Because we take very lightly when you are dealing with company. No, you say, okay, it's a company. No, they don't do these type of things. No, they are the people who do all those sort of things. Right? They can do anything. Overnight, they can say we are bankrupt. So it's very dangerous. Right? So be careful when you're dealing with companies. You have to have extra controls, extra careful. Because the directors are changing. Overnight, you don't know when you need to ensure that if you are signing a document always get a copy of the certified copy of the directors list before you go for a facility, right? Because sometimes they might move out without updating your documents. And also better you do a search at the land register of companies to make sure that all these people are there. Sometimes you get your hard copy says something else. When you go and do a search at the register of companies, will say something else. So be careful. If it is a sole proprietorship, that's the same person will be there. But in case of a company, you will have a lot of problems. Because there was one experience that I had when we wanted to execute a stock mortgage, and we got at that time it was the previous Companies Act. When we got the form directors list, there were 4 directors, and we went and did a search at the land register of companies. There were 3 directors and 2 were new, which they have not updated us. So you have to be very careful with regard to the signatories. Sometimes they can overnight have a problem and come and say, okay, we want a facility. So you will execute the mortgage and you will give the money, and they will, directors will, without informing you, they will take the money and they will vanish. So finally, the liability will go to the bank, to that particular company, and the new directors might say, look here, we are not responsible. Then what are you going to do? Right? So you have to be very careful in dealing with companies. You can do magic with that. Yes. Any questions?
Sir, can we ask from the register of companies the director details?
Directors, you can do a search, or you can get a form, a certified copy of the form. You can apply for a certified copy of the Form 20. You can.
That means without consent of the company
can as a banker, you can get any copy. You have a right. You can say, there's a sentence to say under which capacity you are requesting this document. Is it the company? Is it the attorney? Or is it, you can say, the bankers to the company? You can. It's not a problem. You don't have the consent of the company. So these are public documents. That company's Form 20 is a public document. Anyone can do a search. There's no requirement for you to have a relationship. If you take you individual, you can go and do a search. You will say something, okay, I have an interest, I'm going to sell a property. Who is going to check whether you are going to sell a property or not? It's a public document. Any public document, there is no restriction. Even to get a certified copy, there is no restriction. If you are going to say what is your connection with this company, what is your interest over this company, register is not checking all those things.
So as an individual, can apply?
Can. No problem.
Even to get the details of private limited companies, we can.
You are going to say that you are a supplier. So who is going to check whether you are supplying or not? You have an interest. You are one of the creditors. So what? Register is not going to check whether you are a creditor or not. They can't do. So it's there just to see what is your interest over that. Right? So normally, now for an example, you are a competitor. You are not going to say you are a competitor. You will say you are a creditor. So register can't check the books and see whether you are a creditor or not. No. Any individual, any company, no, anyone can do that.
Is there a charge for that?
Sorry?
Is there a charge for that they are charging?
Sorry, I couldn't get you.
Do that register of companies charge from the person who requested those documents? Charges?
Yeah.
Do they charge for that requesting those documents?
Yeah. That's for a search or a request form, they have different amount. I can't remember the amounts. Depending on the document, they have charges. But in time to come, what they say is they are not going to issue certified copies. Even online, you can apply. I don't know. I have not applied online, but it's possible. You want a certified copy, you can online, you can apply, right? Now those companies who have registered their documents online, it's a matter of just certifying, so you can apply through online. So that's a good development from country's point of view. That was the original intention in 2007. They wanted to have online registration process for companies and to register everything online, to issue certified copies online. Only after 14 years only now it's working. They have done a good job up to now, but it took almost 14 years, right? So today you can online upload, you can online obtain certified copies, but I don't know the process of a third party applying online. I think it should be possible, but physically you can do a search. That's possible.
In case of such, how long does they take, usually, to take?
Sorry?
How long do they take to get a copy, certified copy? Usually?
That's an important question. These days you have to wait for months and months. Right? They say first wave, they say second wave. Sometimes you can't file documents at the register of companies. They say you have to wait in the queue. They say, okay, we are closed on this day. They say we are just only 50% working. So many reasons. Register of company is a place very difficult. Sorry to comment on that. We are dealing with them a lot. Since we know the practical difficulties, it's very tough. Especially these days, it's very tough, right? So I can't tell you an exact date, but for a search, if they are open, you can go and you can fill the form and do the payment and do the search. To do a search, it won't take time, but if the register of companies is open, but if they are closed, you can't do that search as well. But getting a certified copy, it will take time because they have to get hold of the file and issue a copy. So continuous changes in the register of companies, staff get changed. So many practical issues are there. They are understaffed. So many concerns are there. So it's where they are doing a very good job with a lot of difficulties. Right. Any other questions?
Okay, sir, thank you.
Are you into lending, Sampath?
No, sir.
What is your area?
Branch banking.
Which bank and which branch?
I have Ceylon, have lockdown.
Ceylon have lockdown. Right. Okay. Any newcomers today? Can you give a brief introduction about? Yeah. Brief introduction.
Sir, I'm a newcomer. I am Shan. I'm from Commercial Bank. I'm currently working at Columbus Event Branch.
Columbus, right? Okay. What is your experience? How many years?
This is my 10th year.
10th year.
Okay. I'm in the credit department.
Good. Good. Anyone else? Newcomers?
Yeah, I'm Dennis.
Yeah. Okay, Dennis. You told that you are RM at NSB.
Yeah.
What is your region?
Northwestern. That is in Kurunnagal and Puttlam.
Okay. Right. Okay. Any other newcomers? Chaturanga?
So I am Chaturanga.
Yeah.
I also work in National Savings Bank.
Okay.
And I am now currently I'm working. Currently I'm in the regional office, Northwestern region. That is my regional manager.
Okay. Boss and Gola both are here. That's good. Right. Okay. Good. Right. What about Kaushalya? Were you there last session?
No, sir. I'm a newcomer.
Yeah.
I'm working at Bank of Silla.
Okay. Which branch? Or which
Premium
area?
branch.
Premium branch.
Yeah.
Okay. What is you're into branch banking or credit?
Branch banking, sir.
Okay. Anyone else? Madhuka? Madhuka, you are a newcomer, no? Madhuka
Yes.
or Madhuka?
I'm Madhuka.
Yeah, Madhu.
I'm working for Nation Trust Bank attached with American Express call center, credit cards. Right.
Okay, right, fine. Prasanna, were you there last session?
Yes, sir.
Okay. Any other newcomers? Subhashana? Subhashana? Because I have face. Okay, sorry, that's okay. Okay. Right, fine. Good to know you all. Yeah, so if a company is going to reduce its stated capital, it's little bit risky from the company's point of view, because that is the contribution of the shareholders. Now, if a company wants to borrow from the financial institution, you will always say to increase the stated capital, because normally 60-40 is the percentage. Now, if the company's capital, if the shareholders' capital is 60, banks or the financial institutions will lend 40%. Right? Always you need to maintain 60-40% or more than that, depending on the customer, depending on the KYC. So if the company is going to reduce its stated capital, that means the shareholders' contribution, they are going to reduce it. It will negatively impact the bank. So because of that, normally if you have seen your offer letter given for the companies, you will say, in case if the company decided to reduce the stated capital, you have to inform us. If you don't inform, you can't do anything actually, right? But they sign. Offer letter is a document that they sign. When you come to customers, they are not bothered anything. They will sign any document what you give, because they want money. That's it. But still the banks want to put some controls. As a result, they have included these clauses: any reduction of stated capital, any part distribution of your assets, you have to inform. In case of a dividend disclosure, you have to inform, right? So many conditions are there. If possible, try to get hold of your standard company offer letter and see what type of conditions are there. Right. Issue of shares, I told you, it can be IPO or it can be a subsequent issue by way of a right issue. Now, prospectus is a document issued by a company when they are going for the first time share issue. Now, for an example, if I have a public company, unlisted, if I want to be a listed company, I have to fulfill the requirements of the Colombo Stock Exchange. So minimum requirements, minimum you have to have last 3 years profit. So if you can fulfill those requirements, you are entitled to be a listed entity. And after getting approval from the Colombo Stock Exchange, you can proceed. But when you want to issue shares to the public, you have to prepare a document to convince the public to invest in your company, right? So that document is called a prospectus. The term prospectus means indicating the prospects why they should invest in your company. So the directors are responsible for the contents of the prospectus, and they have to disclose all the correct information. Now, for an example, if they say, okay, last 5 years we had profit, whereas correct information it will be that only 3 years. So they have convinced the public giving wrong information. Then the directors are personally liable. So prospectus is the initial invitation for the public, you come and invest in our company, right? So that's important. Now, one important point I missed. Now, when you come to banker-customer relationship, it's a contractual relationship. Now, to form a contract, what are the basic requirements that you have to have? In order to form a contract, what are the basic requirements? Yes, can someone tell me? Yes? Yes? Bandara, what are the basic requirements?
We will see. There should be accounts. It should be account holder, and it is not down there.
No. Before opening an account, I want to open an account. And what are the now?
So
Forget about
offer an
accounts open. Yes, right.
offer an
Offer.
acceptance.
Okay. How many requirements are there to form a contract?
7.
What are the 7 requirements?
Offer contractual capacity, intention, through concern. I can't exactly remember, sir.
Yeah, what is the most important thing? Yeah, what you said was right. Okay, there are certain requirements.
For an acceptance.
For an acceptance. Anything else,
Purpose.
Desha? What is the first requirement? What is the most important first requirement?
It should be a legal contract.
Okay. If you think methodically in a sequential way, first requirement is the intention. Now, for an example, I feel hungry. So my all this enzymes, everything will go to my stomach and send the message to my brain and say, oh, I'm hungry. Okay, then my intention, now I'm hungry, I want to buy a bun. So my intention is clear. My intention is to buy a bun because I am hungry. So I will go to a shop or a restaurant and I will request the restaurant owner to give me a bun and a roll. So my intention I have clearly communicated to him. Okay, that is offer. Right, before I communicate, okay, then my intention is to buy a bun. So then the next question I have to ask whether this is legal. Buying a bun is legal. Yes, it's legal. That's legality. And then I have to ask whether I have the capacity to buy a bun. Yes, even a minor can buy a bun. So then intention, legality, capacity I have fulfilled. Then I'm going to the restaurant and I'm requesting the restaurant owner, I want a bun and a roll. That's my offer. So that then the shop owner, the restaurant owner realize, okay, there are buns and there are rolls. He will say, yes, sir, I will give you. That is acceptance. Then you have to pay. You say 200 rupees, 100 each. That's the consideration. Transaction is done, right? So the triggering point for any contract, I gave you a very simple contract. For any contract, it may be billions of million or billions of transaction would be billions. You will have to follow the same steps. Intention, legality, capacity, offer, acceptance, consideration, and then come the contractual terms. Now I've get an idea, I want to kill a person. Then the next question is whether it's legal. No, it's not legal, so I can't do. I will have to stop at that point, right? I'm going to kill a person because as self-defense. Now, what is the situation? Can I do that? Yes, I can do, because someone is going to shoot me. I can, on impulse, I'm going to shoot him before he shoots me. So the intention is I want to defend myself. Though it's illegal, but the law will protect me. By my intention is very clear. I want to protect myself. Capacity is immaterial, I would say. So there is no offer acceptance in such an instance. But the point is where the triggering point is your intention, not the offer acceptance and consideration. Those comes later. First triggering point, your intention, legality, capacity, offer acceptance, consideration, and the contract is done. So starting, if you are considering buying a bun and buying a building worth of billions, same steps will go there. I want to buy a 100 billion worth of a building because I want to be the number one building owner in this country, my intention. So then I will check whether I have the whether it's legal. Yes, buying a building is not an illegal thing. Then I will see whether I have the contractual capacity. Yes. Then I will go to the owner and say, okay, look here, I want to buy your building. I'm going to give you 500 billion. If he sees, okay, this is a good deal, he accepts, and we'll sign the contract, and I will have to give 500 billion. That's it. So opening an account is the same. Customer, I'm going to come to your bank. First, I will decide, okay, I have a need of opening an account. That's the intention. I will see whether it's legal, opening an account. Yes. I will see whether I have the capacity. Yes. Even a minor can open an account with a guardian. So then I will come to your bank. I will give my request form, right? Or I will fill the mandate and give it to you. That's offer. If you are happy with my KYC, if you are happy with my standings, you will accept it, and you will open the account and you will request me to deposit. That's a consideration. So behind any contract, you will have all these basically 6 to 7 requirements. Right? If you can't fulfill one requirement, you can't establish a contract. So in order to formulate a contract, legal contract, you have to have all these requirements. But you can form illegal contracts, importing drugs, importing gold without, or smuggling gold. All those are also contracts, right? But those are not legally accepted. That is why we consider some as criminal offenses. Okay, any questions?
So,
yeah.
I have some question. With regard to experience, what are the most riskiest that in case of type of customers? Is that limited liability companies?
Companies are the riskiest business types. Because if it is a sole proprietorship or a partnership, since they are personally liable, they will have some controls and they have to sell their personal assets and recover. But when you come to companies, if the company doesn't have adequate assets, who is going to pay? Yes? Who is going to pay?
Lender has to pay.
Yeah, you have to bear the loss. So the most riskiest types of companies are the types of business entities are the companies.
Okay.
And the least priority is given by the bankers are for the companies. Because we say, okay, we have these companies out of our portfolio, 80% given to companies. Oh, but be careful. Overnight, the companies can do anything, right? So we have to be very careful. Extra mile, you have to go and make sure that you have all the controls over that company. Overnight, they can say we are bankrupt and we are liquidating. So make sure that you get the assets and liabilities, continuous monitoring, continuous KYC relationships. Any change in the market, any change in the business, you have to be very careful. You should know. Always get a copy of the annual return. And every year you have to get updated annual return. And make sure that what is the stated capital, what are their liabilities. Everything you have to get updated. Who are the people behind that company? So it's a requirement. It's a must. Because they can do anything what they want. You will have a lot of problems. Yes, Sampath.
So can the companies stay without taking? Can the companies stay without taking annual returns, or they should take? It is mandatory.
Sorry.
The annual returns, the company should. Is it mandatory to take those annual returns every year, or they can stay without taking them?
They have to mandatory. They have to mandatory. No, they have to mandatory file. It's a mandatory file document that they have to file. If they don't file on time, there's a charge as well. It's a mandatory requirement to file.
So they have to get that annual, no? Maybe every year.
Yes. After the annual general meeting, 30 days, if I'm not mistaken, there is a time frame given, number of dates. Within that number of dates, you have to file the annual return.
Okay.
You can get a certified copy from that as well.
Okay, sir. Thank you.
Okay, then we'll stop at this point and I will continue the rest of the slides. Just go through the slides. I think it should have shared these slides with you all. So please go through the slides, and next time we can continue this, and I will go back to the second set of slides. And once that is done, I can share your assignment. I can give a brief idea about the assignment, and I will try to share the assignment as well, individual assignment. Okay, right? Any questions? Okay, then important point: be safe, because you are exposed to the customers. You are dealing with your customers. Make sure that you put all your controls, and most important thing, to get protection. You have to get protection, and because your family is depending on you, you can bring germs. So be careful. This is deadly virus, and we have to be very careful on that. Yes. Okay, then thank you. If you don't have any other questions. Yes, Sampath.
Sir, if these slides can be uploaded few days in advance, it can be easy, sir.
Yes, sorry. In the morning only, actually, I forwarded the slides. I couldn't do that. Sorry about that. Even the slides set 2 is also now, I think they will send those slides as well. I have given the sets 2 and 3 both.
Okay, sir. Thank you.
Okay. Bandara, anything?
Sir, can we take director's private asset as security for company loan?
Company facility? Can, no
Yes,
problem.
sir.
I have a vehicle. I want a facility for my company, so I can give that asset to the company. But yes, I can do it, no problem. In such an instance, you don't have to create a charge because it's my private asset.
It's a private asset.
Yeah, normally we don't consider it as a third party asset, third party facility, because I'm a director, I'm the owner, and it's my company. So it's not considered as a third party security as well. You can.
Okay, sir. Thank you.
So in such case,
Yes, Prasanna.
Sir, if we are lending to a related party, such as a director or company, for our director, also a director for that company, what rules we have to guidelines?
Yes, the related party. Now, when you come to banking sector, there is a related party. Central Bank has given some instructions which how to handle your related parties. If you are a listed entity, there are rules applicable by listed Colombo Stock Exchange, and they say that you have to have a related party transaction review committee, and all transaction that goes before you credit, you have to those has to be reviewed by the related party transaction committee, and before and make sure that you have not given any favorable treatment for those related parties, right? And the concern is there are 2 types of related parties. It can be your own director, your bank director, and it can be related parties of your bank directors and the related parties of your company shareholding. If a shareholder is holding more than 10% of your company, that company will become a shareholder related party. That particular company is, if that company is having a structure, group structure, and if that company is holding more than 51% of shares of its subsidiaries, all those has to be captured as related parties. So it's not a easy task unless you have a proper system within your organization to capture everything. It's going to be very tough. But if you are giving a facility to your director, before you grant the facility, it has to be approved by 2/3 majority, at the board before you give the facility, right? And as a branch officer, what you should know, there should be a system in your bank to identify the related parties then and there. So it may be that once you enter the NIC number or a business registration, it will indicate that so and so is a related party. So at that time, the most important thing, you can't give any favorable treatment. Depending on the type of the related party, prior to granting the facility, you have to get approval from the related party review committee. So in order to show that you have not given any favorable treatment, you have to come out with a comparable. We call that as comparable. Now, if you're going to give, we'll say, a director's own company 10%, and if you have another 10 customers whom we have given 10%, no problem, you can offer that trade because it's a comparable and you have given to other customers as well. So always when you're producing your transaction to the review committee, you have to produce that along with comparables for your review committee to see whether you have given favorable treatment or not. So I summarize that in a small short way. It's a long process. You said you are working for commercial bank, no?
People's Bank, sir.
People's Bank. So definitely you might have a system where you can capture then and there whether so and so is a related party. In our bank, it's in the Finacle system itself, we have marked these related parties. So when the branch officers, when they enter the NIC number, they will, or the company number, they will get the message that so and so is a related party or this company is a related party. Then thereafter, after that, they have to follow the related party process. So the requirement is before you grant, you have to get approval from the related party transaction committee. There is no covering approval. Okay.
Okay, sir. Thank you, sir.
Okay. Okay then. Thanks a lot. Stay safe.
Thank you, sir.
Thank you. Thank you, sir.